And now it's like now, yeah.
I'm keeping it free.
He's got a good
What do you say? What is part-time with Brian?
Yeah, we also
I wonder you would think.
I actually, I forwarded to Greg and she was, so Frank was like,
Good morning, everyone. We are not going to be able to be very innovative if I can't figure out how to get this mic going. Can everyone hear me all right? Go ahead and find a seat. So good morning, everyone. I'm Cameron Smith, the Director of the Department of Consumer and Business Services, DCBS, and pleased to be here today to welcome you to our first Innovation Forum. I want to thank all of you for taking time out of busy schedules to be here this morning. And a big thank you to Andrew Stolfi and our team in our Division of Financial Regulation for helping to organize and host this forum. Let's give the team a round of applause. So DCBS is Oregon's primary consumer protection and business regulatory agency, and our mission is to protect and serve Oregon's consumers and workers while supporting a positive business climate. And you'll notice in our mission, there is that duality. We will always be passionate advocates for Oregon's consumers and workers, but we also want to see the industries, businesses, professions, and trades that we oversee to thrive across the state. And perhaps most importantly, across our diverse teams, from workers' comp to building codes to insurance and healthcare access and financial regulation, we don't see these two halves of our mission as at odds with each other. Our team embraces that healthy and competitive markets are a way to ensure consumer choice that is one of the best forms of consumer protection. Now, in all of our lives and in all of our worlds, change is a constant. Innovation is essential for continued progress and relevance in both the public and private sectors. And innovation in many of our regulated industries like banking, lending, securities and investments, insurance and healthcare are a multifaceted conversation across entrepreneurs, long-established businesses, elected leaders, industry regulators, public advocates, and our citizens at large. This forum and the conversations we hope to spark are a recognition of that interplay across the public and private sectors in areas like crowdfunding, peer-to-peer lending, payment and settlement technologies, cannabis, transportation network companies, and the ever-changing world of healthcare and insurance. There are not quick and easy answers on how to best balance and navigate the clear benefits of innovation with continued strong consumer protections and market stability. But it's the relationships here that we develop across sectors and perspectives that will help guide our approach in Oregon. So again, thank you for taking the time to attend today. We've got a great lineup of panels and speakers. I want to first bring up Andrew Stolfi, our administrator for the Division of Financial Regulation and a tremendous advocate for both Oregon consumers and our business stakeholders. Welcome again.
Good morning, everyone. Thank you very much for joining us today. And thank you, Cameron, for framing why we're here today and why the department has a vested interest in ensuring that Oregon is viewed as a place where innovation can flourish for the benefit of both consumers and businesses. Before we got started, I've just got a few quick logistical items. The food in the back of the room will be available till 10 a.m., so please do help yourself. And don't worry, the coffee will be refreshed throughout the morning, so there'll always be a fresh supply. The Convention Center does have free Wi-Fi. It's the Salem Convention link. Please be sure, I'm sure all of you will be live tweeting throughout the event to please use hashtag DFR Innovations up there on the slide when you get to urge to tweet. And our excellent comms team is here. We'll be taking pictures and tweeting updates throughout the day. How they do that, I have no idea. So finally, we are also live streaming this event, and the video will be available on YouTube afterwards in case you want to share this or relive some moments with your colleagues. I'm sure we'll send a link around after the event to tell you all where it is. So with those logistics out of the way, let's get back to the substance of why we're here. I got to say, we are really excited to have brought all of you together to share some stories and celebrate how Oregon businesses are embracing innovation. So during the presentations and conversations today, it's our goal to show that innovation is so much more than just the latest tech. It's how we collaborate. It's how we become more efficient. And most importantly, it's how we can provide better products and services to Oregonians. Now, innovation is not a new thing. It's been around since the beginning of time and has changed the course of human history many times over. For example, relatively simple innovation like an assembly line transformed manufacturing by enabling mass production on a scale never before seen. From there, we began streamlining how we connect with each other and access our resources. Next on the horizon was a digital revolution that cleared up and brightened the world around us. Once we stepped into this century, phones started to become portable computers that quickly became an innovation we could not live without. I've got two on me right now. I'm sure you're all not far behind. And now we're enjoying advanced automation and coming together in a sharing economy. I gotta say, it's really amazing how quickly innovation and technology evolves. I doubt that when Henry Ford watched the first Model T run off the assembly line in 1908, he could imagine just 100 years later, there'd be a Tesla running off a similar assembly line. Now, when it comes to innovation, we all have a role to play. It's your job to come up with the ideas, to push the envelope of what was previously thought impossible or unattainable or too expensive. It's our job then as regulators to support you in this so that Oregon consumers can be the first to experience new products, new services, and new ideas that can enhance their lives. Along this line, I say if there's one key message I want to leave with you today, it's that Oregon is the place for innovators to bring ideas. Not after they've been tested or launched elsewhere, but first. And I think the reasons why are literally all around us. Oregon's diverse landscape and wonderful mix of coastal, rural, and urban populations offer nearly every type of market and consumer you could wish for. We also have a proud history of innovation. Don't forget that Oregon's diverse group of technology and software companies have helped us earn the nickname Silicon Forest. Our state has the consumer base and the resources to help businesses develop products and services, create more efficient tools, and share them with early adopters who embrace innovative solutions that enrich lives. So as regulators, my colleagues and I are here to help you navigate the state's rules and regulations so you can effectively implement your ideas in order that Oregonians can see them, use them, and enjoy them first. We welcome you to introduce ideas that enable Oregonians to make better financial decisions, to live better lives, and to better care for their families. So I'll start inviting the panelists up to the stage right now. I'm going to say we're fortunate that when it comes to innovation, we have some great homegrown stories to tell. We're going to start the day with a few of these local innovation case studies. So if we can get on the stage now, representatives from the Standard, MAPS Credit Union, and MedSavvy, please. All three of these companies have embraced innovation in different ways for the benefit of their consumers. And we're going to start today with the Standard. Brianna Scott is a Product and Service Management Director with the Standard, where she guides strategic development on its product portfolio, including market analysis and product positioning. She leads the group insurance product team responsible for creating and refining the Standard's employee benefits and voluntary product and service offerings. Brianna, I'll turn it over to you. You could please tell us more about dealing with disruption and bringing in new inspiration.
Thank you very much. Hi, I'm Brianna Scott from the Standard. Thank you for that lovely introduction. My role has actually recently changed, so my new title is Director of Business Relations, actually. I'm hoping that that can be adjusted so we can see the slides correctly just going forward. Perfect. So responding to market disruption. So I'm going to talk a little bit about how the Standard has become a little bit more innovative, responding to things that have happened in the marketplace. So the first kind of case study is just absence management services, which some of you may or may not even be aware exist. Absence management, these services were developed to assist employers when they turn to carriers for guidance with the complexity of compliance with the FMLA, with the Uniform Services Employment and Reemployment Act, which is USERRA, state-specific leave laws, and then company-sponsored leave programs. Really, in a lot of ways, payroll, HRIS vendors probably made a lot more sense for this. They were already kind of tracking when people were taking time off. People would report their vacation and things like that. But frankly, they were not interested in solving this problem. So employers were turning to carriers. Carriers responded. And we put our heads together as an industry and kind of figured out a solution for this, which has become absence management services. That has also continued to evolve. Carriers and TPAs turn this into an integration with core insurance products, specifically short-term disability, and have turned this into an offering called integrated disability management. We've continued to evolve the actual offering to address new regulations. The ADAAA is now something that is commonly managed and offered. There are services provided to help employers be compliant as part of our absence management suite. And municipal leave management, that's kind of where that marketplace is going now. The other thing that is coming, paid family leave. So this is a further evolution, again, responding to marketplace disruption of the absence management services. While there were 3 states that had already offered a paid family leave or statutory disability, New York really came and disrupted this marketplace in 2016. A huge amount of this was because in order to continue to sell statutory disability business, which most insurance companies and TPAs were doing, you also had to start offering paid family leave. So it was not a choice for most if you wanted to stay in the marketplace of New York. So the industry actually had to, again, respond and evolve. Paid family leave is kind of a hybrid of absence management services and disability. It pays, unlike FMLA. It's kind of like a paid version of the federal, the Family Medical Leave Act. It was unique in New York in that the state set the rates and all the administrative details, but they had very little familiarity of existing leave laws, whether that at the federal level or even within their own state. So the industry actually responded with a little bit more innovation in helping regulators for the kind of the first time, really getting more involved through both trade associations and then actually directly with some of the regulators, meeting with the Department of Financial Services in New York, trying to influence and help them craft and develop regulation. Regulations also took a really long time to develop, so frankly, insurance companies, we had to innovate and figure out how we thought we might solve for this before regulations were even available. So we had to actually start building in the absence of any sort of regulatory guidance. Okay. This is continuing though now. It is now turned into paid family and medical leave. So many states now don't have an existing statutory disability program, so they're now combining statutory disability essentially and paid family leave, so you can take time off for yourself, to care for family members, to bond with a new child, for military exigency, for all sorts of different leave reasons. So this disruption is not ending, it's evolving, and the market has to continue to innovate to respond to this. Many, many states are proposing and passing. Oregon, quite frankly, is very likely to pass paid family and medical leave. House Bill 2005, I would anticipate, is very likely actually to pass, maybe in this legislative cycle. So innovation is needed again from the market to ensure that we're getting creative in helping shape what this can be and doing this in the most effective ways for employers and employees. Many of the ways that we can assist probably the most as insurance companies and TPAs is, again, meeting with regulators quite a lot. Myself, I came down here and met with many, many representatives and senators to try to help inform as they're crafting that House Bill 2005 and crafting that legislation. We are trying to provide some guidance and make sure that we're getting everything kind of in that program that meets the needs of Oregonians. And then now I'm going to switch over to the topic of bringing in new inspiration, because I think that's actually probably what's more interesting to this group. So we're going to talk a little bit about the evolution of InsurTech. So the landscape of InsurTech has really exploded in the last 5 years or so. Insurance is now experiencing tech growth, more like healthcare was approximately 15, 20 years ago. There was a lot of focus there. Epic came along, really innovated and changed that marketplace. Same type of thing is happening in the insurance space now. And general financial services really started experiencing this 8 to 10 years ago, I would say, with fintech. You would hear that a lot. That still exists. That's still an evolving market. But InsurTech has really become like the latest thing. So why is insurance appealing to startups? And there's many, many reasons. These are just some of them. We tend to be really burdened by legacy systems. That is true of almost every insurance carrier I'm aware of, unless they started in the last 5 years. Those are the only companies not burdened by some amount of legacy system. We typically are fairly slow to adapt. That can be due to size, that can be due to legacy systems, could be cultural, could be all of that combined. The standard is frankly all of that kind of combined. It's hard to move an organization of the size of ours all in the right direction, right? All in the same direction, have focus and still get our business done. We all want to increase market penetration. So we all want to figure out how to get more business, of course. Most, if not all of us, are trying to solve, to increase our efficiency while reducing our expense. So we're all trying to do more with less. And there are common problems that basically every insurance company struggles with, which InsurTech then seeks to solve for consumers. So they have done a lot of research about here are the pain points of insurance. Everyone knows what those might be. And of course, that's where you dive in and you're looking for problems to solve. So there are 3 kind of broad themes I'm identifying as the reasons. There are many, many different themes that people are trying to solve for. But these are 3 major ones from my perspective. So we're helping companies get more efficient. You're trying to improve the customer experience, or you're trying to sell yourself in new or interesting ways, targeting new markets. And that's kind of where different InsurTech companies are focusing, different startups are focusing. So some examples of getting more efficient. Data and analytics, that's probably the biggest thing that you will hear about when it's talking about getting more efficient. So predictive modeling, using existing data sources, but helping insurance companies really trying to figure out how to aggregate all the data they have. We have a lot of data. Many of us don't manage it particularly well, not in a unprivate way, like we have all the privacy and cybersecurity, but we are trying to, InsurTech comes in and tries to help us use our existing data sources to analyze better. And then using bots and automation, that's the other piece that you hear about a lot. Digitizing documents, so we are a paper-heavy industry often. So helping us be able to analyze documents very quickly and take the metadata needed out of that. And then streamline billing to individuals. That's another key problem that insurance is often needing to solve. New targets, there are twists on existing products for new markets. So we recently evaluated an episodic life carrier. So we were actually working with Oregon to see if we could maybe get that approved. And it was essentially buying micro-term life, 2 days of insurance when you're traveling, when you're doing some high-risk activity. So that's one type of example. You're targeting brand new markets and evolving the products. Another example is getting really way more targeted with risk, so using social media and other things to figure out appropriate risk. And then new ways to get to the market. So how do you take your existing products and evolve, but target new markets you haven't been able to target before? Gig economy workers are a good example of this. And then last, improving customer experience. AI and machine learning, that's a big part of improving the customer experience. Using those tools, it improves virtual agent communications, can improve straight-through processing through machine learning and automation. Another big customer experience improvement is just the user interface improvements. So the look and feel of your products and your view to the customers and how they buy from you. And then facial recognition, selfie tech. This is something more in individual disability or property and casualty, but you're seeing more and more of that as well. There are some challenges, and then I'm going to be done and pass it on to the next person. So some of the challenges, honestly, there are regulatory challenges with InsurTech. They don't totally understand all the regulations associated. That's part of why they turn to insurance carriers that are well established for partnership. Privacy and security concerns. So some of the tools are really, really cool. They might also be a little concerning from a privacy and security standpoint. Funding for startups is inconsistent. There's a lot of competition. There are many, many, many startups trying to solve the same problems, and they need a more established partner to succeed. So startups and non-insurance companies are going to come into the market. We have to be thoughtful about how to partner, or insurance companies will become the dinosaurs. We will get replaced by InsurTech.
All right, thank you, Brianna. It's good to hear how you spend a lot of time not only responding to market disruptions, but also looking for new innovative ways to both create new business, seek new business, and be, as you said, do more with less, which I think might be a theme that we'll probably hear throughout the day. So next up, we're going to have Mark Zook and Chris Giles from MAPS Credit Union. Mark has been with MAPS excuse me, since 1992 and is currently its president and CEO. In addition, he serves as CEO of MAPS Service Agency and sits on the board of managers of both the Willamette Business Group and Ongoing Operations, two of MAPS partially owned subsidiary companies. Chris guides the payments functions at MAPS, including the debit and credit card programs, to ensure they align consistently with the long-term vision of the credit union as an agile, technology advantage organization. Gentlemen, turn it over to you to tell us more about multi-track innovation.
Thank you. I'd like to start by saying I was a little bit amused by the fact that Aaron and Andrew chose the two longest-winded speakers in perhaps MAPS Credit Union's history to deliver a 20-minute presentation today. So with that, I have my timer. We'll see how we do. As Andrew said, I'm Mark Zook. I'm with MAPS, CEO for the last 11 years or so. And Chris, who really is our digital strategies leader in the organization, has payments and digital strategies. We want to spend a little time talking to you today really about the evolution of the organization to accommodate what we see our needs in the future. So I want to take you back a little bit, not too far back, but back to 2015, when all was well in the world in financial services. If you were a credit union or a bank, since the economic downturn, we've seen pretty strong financial performance in our industry. MAPS was not alone. Very strong membership growth, 8 to 10% a year. Really strong return on assets. What sort of the driver is that fed the growth in assets in the organization. Really over the course of maybe 6 or 7 years, we more than doubled in size and had enough revenue to keep up with that growth with regard to our reserves. But underlying all of that, and going back farther, there were cracks in the pavement. And I think it's true for everybody in financial services on the financial institution side. As examples, we were noticing that over the 7 years prior to 2015, in-branch transactions declined 25%. In fact, the only reason that MAPS was sort of holding steady in in-branch transactions is that we'd grown 8 or 10% a year. So we're onboarding more than 25% member growth, and yet transactions are hovering at the same level. Another example would be we're very good at MAPS at onboarding millennials, much better than most credit unions and banks. And we would see them come in and be very happy with us, and we would see them engage with us. And as their financial lives became more sophisticated, we'd actually see them leave us. So we recognized that we weren't totally confident we had the right product positioning in place, or maybe even the right structure to accommodate them. Our problem was not innovation. I think as far as innovative financial institutions go, and in particular credit unions, we're sort of known as sort of a first-to-market leader and an innovator in the credit union space. Our real issue was, could we build an organization capable of rapid change in member expectations and demand? Could we build an organization that could speed up its process of innovation, its process of change, to keep up with the never-increasing demand from members? It's really more a capacity issue than it was an innovation issue. And by the way, I say that we are an industry leader in innovation, and we need to put a big asterisk by that, because I think banks and credit unions by nature, that's not a very high bar. So we work to that low bar, and we do a pretty good job of it. That could be improved as well, but more importantly, can we change the organization to become more change able? We sat down, we concluded that it was not about 3 or 5 year business plans. It wasn't about sort of the conventional way of looking at sort of short and medium range strategies. We said what we really needed to do was paint a 10-year picture for what we thought we needed to look like 10 years from now. A plan that was so flexible that it could actually react to changes in the marketplace as we were cultivating sort of the direction. And we came up with 6 themes, and I think, yeah, we have it up here. I'm going to talk about components of 3 of those themes. The first one is agility, and that is, in fact, it is the title of that theme. Theme 1 in our plan is agility, which is a very, very overused word. And I think the only way we can give credibility to that word anymore is defining agility by the way MAPS defines it. And the best way to define agility for us is through an example of the first exercise we did in order to determine what this meant to us. It came down to really 2 questions. And by the way, we started by looking at different departments in an organization and how agile those departments were. And obviously, technology rises to the surface as one of the most critical components for a change-oriented organization. We said, listen, 2 questions. Run and change. How much of your time is spent on the run, keeping the lights on, making sure the patching is done, making sure that the help desk is up, making sure that nothing goes down on a tactical daily basis, as opposed to what percentage of our energies, our organizational effort is placed towards change. We hired a gentleman who was the former head of strategy for Nike, IT strategy for Nike, who had done a very similar project. In fact, we had different words for it. We stole his run change words. Those are Nike. Let's give credit where credit's due. Nike is run change. He came in and he said, the first thing we need to do, obviously, is figure out where we stand today. So in 2016, MAPS Credit Union Technology Department, full of developers, full of all kinds of very resourceful people, what percentage of our effort was run, keeping the lights on? What do you think? 94%. Well done. That means 6% is dedicated to change. Now, is this going to work? Does this work for any of us? No. So our efforts became focused on how do we migrate the organization to better impact that change percentage. And honestly, these are very hard numbers to move, but every single percent into the change bucket means better member service, means better experience for our members. It means better back office experience. Nike's numbers were actually, and I will tell you, we've never concluded what those number percentages should be. Nike started at a 60-40 run change. And over 8 years, they got it to a 40-60. Now, I don't know about the rest of you, but if you're a heavily regulated agency or institution, I'm not sure we can get to a 60% change. But every effort we can take to get closer to those kind of numbers is important to us. The next thing we did, and I'm killing Chris's time probably, sorry Chris. Oh no, 3 more minutes, we're good. But the next thing we did was actually look at this, this component, I called it talent up here. Really, to me, that means talent, structure, and skill sets. And we made a couple of pretty critical changes to the organization. The first was we said, the way we make decisions in the organization is good. It's good for, it's hierarchical. It starts at the executive team level and trickles down. Really great, especially when you're making financial decisions, right? Executives tend to be very outcomes focused. They tend to look at numbers. Not always so great when maybe your energies need to be focused on member experience and member demand. And so we actually restructured the organization into 2 teams. And the first among equal was a member experience team. And we took executives and put those folks on those teams. But what we did was we actually hired up into lots of different elements that we needed: business intelligence, better compliance. What does the 2 mean? Oh, 2 minutes, right? Oh, to him? You're keeping track. I don't even turn the phone off. So what we needed to do was look at embedding those folks with the right experts, the right voices in the right places, followed by a second team, which was Asset Liability Committee, which was a traditional committee in the organization, generally led by executives. We created that ALCO committee to actually be more educational. So we brought in leaders throughout the organization. And part of that process is an education process so that every leader in the organization understands the underpinnings of the financial structure. And we marry those 2 things together. So those 2 teams meet side by side twice a week, every other week, and they cross-pollinate each other in the decision-making process. So sort of a big fundamental change focused on member experience and member demand. The last thing I did there was actually say, well, geez, now all these direct reports, I have 10 direct reports, all traditional functions. That's probably not going to work. We need to align those to the teams. So I now have 3 direct reports. I have a chief experience officer, a chief risk officer, and that risk officer is responsible for finance, accounting, compliance, internal audit, all of those functions. And we run a fairly large cannabis program in Oregon and in the United States, and that cannabis program resides in risk as well. And then lending, and lending is really simply, has to have emphasis, but it's really a combination between risk and experience. So those are the 3 legs of the stool. Having said all that, one of the key components of that journey was understanding that over the course of 10 years, you would probably migrate from a branch first organization to a digital first organization. And so that's where Chris picks this up. Did I make it on time? All right.
Great. Let's see. Thank you. So, Mark gave you the to a digital first organization. So, MAPS has a history with technology. I would say, Mark mentioned it earlier, as a financial institution, so you set your universe there, we're pretty innovative, and we've, over the years, built some pretty cool stuff. We have a team of developers that are skilled, and we have been building some of our own member-facing technology for almost a decade now. We actually built the first text banking application that didn't require you to be enrolled in mobile banking back in 2010, before everyone had a smartphone. We built our own mobile deposit platform to take deposits from smartphones and process those and put those into folks' accounts, and actually sold that to around 65 other credit unions within the industry. For a long time, over 10 years, at MAPS, I was running what was essentially a software development company that was building software for the credit union that we would then sell to other credit unions. So there's a history there of building some cool things and developing some of the muscles that you need to do the things that we need to do going forward. The key for us in changing sort of what we were doing before to rising to meet this 10-year challenge that Mark had laid out for us was developing the skills to decide what to build and build things that would actually create behavioral change either inside the organization or with our membership. And what I mean by behavioral change, I think is best illustrated by maybe some of the companies outside of our industry that are doing this very well. Companies like, let's say Facebook or Instagram or some of these social media companies. Now the behavior they're trying to change is they're trying to get people to stop walking around looking at each other and get them to start walking around staring at their phones instead. After you leave here today, walk down the street and look around, and you'll see that they are very successful at doing this. Essentially, we're trying to do the same thing, but instead of trying to get people to stare at their phones for increasing duration and with increasing frequency so that we can show ads to them, we're trying to get people to save more, to borrow responsibly, to protect their assets, and really to improve their financial lives. I'm not saying that those other guys are cheating, but it's probably easier to get them to just stare at their phones and get mad at stuff than it is to do what we're trying to do. That said, it's a wonderful challenge, and we're very excited about what we've got in front of us. So, becoming an organization that is innovative enough to use this technology to move in the direction and to do it quickly and in an iterative fashion requires a lot of work. It's a daunting challenge because there are a lot of moving parts, there are a lot of things that we need to accomplish. The phrase that comes to mind, and I repeat it so much that some of my teams get sick of hearing it, is, how do you eat an elephant? It's a big, huge task. The answer I always give is you grab an ear and you start chewing. And so for us, the ear, essentially, the first ear, was to take a look at the technology platforms that we use at the credit union and establish whether or not we're with the right partners. To look at those partners and evaluate the platforms that we have and the companies that run them and decide, is this the right partner for us? As a financial institution, there are some key partners and key core, the core system, the digital banking platform for remote access for members, our payment processors, and our loan origination system were some of the big rocks that we had to look at first. We looked at those and decided, do we have the right amount of access to the data that these systems provide? Is it an open database? Can we get to it? Do they have APIs so that we can control the user experience and manipulate the back end? What direction is the company going in? Are they putting resources into this platform, or are they sunsetting it and moving into a different direction? There were a lot of decisions to be made there when we looked at the core technologies. But the mantra and sort of the drumbeat that I kept banging on at the credit union was, change is hard, conversions are hard, but it will never be easier than right now. As we grow and become more complex, these changes will only get more and more difficult. So let's make these decisions with all due diligence, but if the need is to change, then let's change and let's move. So this happened in 2018. What we ended up with in 2019 is essentially a year of migrations and vendor changes. So a lot of moving pieces this year, changing out our payments platform, changing our loan origination system, migrating our digital banking platform from a vendor-hosted environment to our own cloud-hosted environment so that our development team can actually make changes, can iterate, do A/B testing. We can see all the data, all the user interaction as it comes through our systems. We're rebuilding the foundation of our technology within the credit union to enable us to move forward and build in two key areas. One is the member experience, and the second would be internal efficiencies and really driving business results. So on the member experience side, we have a vision, the 10-year vision at the credit union, which talks about the future that we need to meet. And it really is around a personalized experience for members when they interact with us in a seamless way, whether walking into a branch, calling us on the phone, or using one of our remote technologies like mobile banking. That seamless experience, being personalized, is a difficult thing to contemplate. And so I tried to separate it out into two things that I'm full of catchy phrases that I like to use. I don't know if it's that catchy, but the phrase that I use constantly is we need to automate the ordinary and personalize the extraordinary. So the day-to-day things that members do that are simple and easy and sort of by rote, making a deposit, maybe doing a quick transfer, paying a bill. Those are ordinary functions that we need to try to reduce complexity, make it quick, make it easy, make it simple. But then something like opening a new account, taking out a loan, finding a transaction on their card that they don't recognize. These are now extraordinary events. This isn't something that happens every day. This is something that happens occasionally. And while it happens every day for us, it's a big deal when it happens to the member. And so we need to slow down at that point and be able to personalize that experience. That means we need to use the technology that we have available to us, the behavioral data that we see in our systems, use real-time surveying as a member completes a transaction, send them a survey to ask them how it was. We need to develop the ability on these new platforms we have to separate those two types of activities and really focus in on the best way to accomplish each of those. We use a technique or an approach that I call sense and respond. And so sense is behavioral data, surveys, member conversations as we start to learn what problems we need to solve for our members, and then respond is obviously the other side to that, creating new processes, launching new features, getting new products in place that can help meet member needs. Mark talked about the member experience team. There are sub-teams within that we use to really develop and sort of perform each of these actions. We have the digital experience team, which obviously focuses on everything behind a login that the member would see in a digital environment. We have a retail experience team, which is in-branch transaction flow, processes and procedures and product. And then we have a member feedback team, which is solely focused on collecting behavioral data, quantitative and qualitative, and analyzing that and bringing those learnings to the other teams so that they can create new processes. The last thing, in order for me to stay on time, I'll jump forward and talk about business outcomes a bit. And although as a credit union we're not for profit, we still need to make money. So being a digital organization, in the end, this behavioral change that we want to create needs to drive business goals for us. It needs to drive us toward business goals. So these outcomes that we pursue from a business goals perspective are creating deeper relationships with existing members, creating new members and bringing them into the fold, and then back office automation and actually increasing the efficiencies that we can deliver as an organization. So building the platforms is really the first key, and then the second is really kind of two separate things that work together very well, and that's the member experience side that we use Sense and Respond to do, and then the back office efficiency side, which is really our back office staff are just another set of customers. What problems are they having, and how can we solve those with technology as well? So it's been a great year for us so far as we move through these conversions and getting our platform set, and in 2020 we'll begin really a deeper process of examining problems, A/B testing to solve, and creating those back office efficiencies. And in order to stay on time, I'll leave it there. Thank you.
Thank you very much, Mark and Chris. And I gotta say, so when I think of innovation, I probably tend to think a lot of it as introducing new products or services to the market. And Mark, I was really struck by something you said early on, where for you, innovation also means building an organization that can keep up with change. And I think that's an important thing that we should all remember. I was also trying to figure out what our run change ratio is. I'm gonna have to do some more thinking about that and try to, and I don't know if the regulated entities want us to change more than run or not, but we'll see what we can do there. And Chris, appreciated how you talked about how you're seeking to change behaviors to improve the financial lives of your consumers, and that's most certainly an area where a regulator and a regulated entity can work together and agree that that is most certainly a very good goal. And I'm sure you can confirm that no elephants were harmed in it.
A little fraying over here, maybe, but he's still fine.
All right. Well, thanks. So we'll move on to our third panelist now. We have be glad to be joined by Dr. Sean Karbowitz. Dr. Karbowitz is the founder and general manager of MedSavvy. He's a very passionate innovator in the world of pharmacy. Throughout his career, Dr. Karbowitz has worked to champion best practices that evaluate scientific evidence to predict the performance of medications. He founded MedSavvy because he saw an opportunity to put this powerful information in the hands of patients and providers. So Doctor, please tell us a little bit more about how MedSavvy is innovating to improve outcomes.
Great. Thank you so much, and good morning, everyone. So we're going to talk a little bit about innovation, and I'm going to ask for your help and participation a little bit today, too. So first, what is MedSavvy? Who are we? We're part of Cambia Health Solutions, and Cambia is the holding company for Regence Blue Cross Blue Shield and a number of consumer-directed healthcare companies as well, one of which is MedSavvy. So a little bit of context of how we fit into Oregon. We're based in Portland, Oregon. So Cambia's mission is to transform healthcare. And so when we think about innovation, innovation can be small and incremental, or it can be dramatic and transformative. And the point I want to make today is that I think our medication marketplace of how medications are paid for in America and what's happening with medication pricing needs radical transformation. Does anybody disagree? Does anybody agree? I'm seeing some heads nod, so that's good. All right, we're on the same page so far. I'd like you to think about a time in your life, maybe a personal event in your life where you experienced some sort of a transformation, a metamorphosis, a point of no turning back. Perhaps the birth of a child, or a marriage, or the death of a loved one. And when you were faced with that point, you probably felt some trepidation, some apprehension, and maybe you were scared, right? But at some point you had to push through. So you had to grab some courage to move through that. So I want you to hold on to that thought as I walk you through what's happening in the medication landscape, because it's going to get a little scary. We're going to talk about that. And then we're going to talk about what we could do. But we have to do it together. And I think that Oregon is the ideal place to be the starting point of transforming how medications are used and covered in Oregon has a great history, right, with the prescription drug programs that we've had in Oregon, the medication list, et cetera. It's one of the reasons I moved to Oregon back in the 1900s was because of how progressive this state is. Okay, so the top prescription medication concepts or trends that are happening right now. Medication prices are in the news. I never thought when I was in pharmacy school that I would see when the president would be tweeting about, well, I never knew what Twitter was going to be right back then, but that medication prices would be such an issue, and they are, and we'll talk about some of the reasons why. But one of the questions that doesn't seem to be asked is, are the medications worth it? Like, is the clinical benefit that we're paying for, whether it's $100 or $100,000, or the new medication that was just approved last week, or the gene therapy that was approved last week, Zolgensma, $2 million. Is it worth it? What's the clinical benefit? So drug prices are in the news. The next is specialty medications. We're seeing developments that are like sci-fi movies that, as a pharmacist, like, I love biochemistry, organic chemistry, and these things are blowing my mind of what's coming to market. So we're seeing some really cool innovations. But again, do they translate into clinical benefit? And we'll talk about that. A great example is the third hot topic in pharmacy and medications is opioids. And the case study for opioids is what happens when we're not asking those really hard questions, okay? I'm an innovator, so I'm gonna mix things up. I'm gonna jump around the slides a little bit. Okay, there we go. I'm gonna go backwards too. But this is a chart that I showed 10 years ago. It's an old slide, but this represents the amount of narcotics and opioids that were dispensed in America. Okay, this is a 10-year slide that I showed 10 years ago. So this is like late 90s to mid 2000s of what happened with opioids. So what went wrong? Do we have an opioid epidemic right now? Yes, we absolutely do, and people are dying as a result of it. And I would argue that in many cases, the opioids have done more harm than good for a number of people. Okay, not everybody. Some people have benefited, but more harm has been done than good for a number of people. So what happened? Well, this was a problem of marketing. Okay, so the Sackler family right now, who ran Purdue Pharmaceuticals, is being they're being sued and being prosecuted, et cetera, because of their behavior of misleading consumers, misleading doctors. I published a paper in the early 2000s showing that OxyContin was no better, no safer than other opioids. But when I went to talk to doctors and talk to other pharmacists, you know what they said? Well, of course we're going to use OxyContin because it's safer and more effective. It causes fewer side effects. But when we looked at the evidence, the scientific evidence, there's nothing to support that. There was nothing to support that. Oklahoma City last week, Johnson & Johnson, who owns Janssen Pharmaceuticals, they also are settling for some of the promotion and misleading marketing that happened with causing a public nuisance, I think is what the crux of the trial is, because of what they did with opioids. So the moral of the story here is that sometimes clinical expectations, what we want to do as healthcare practitioners, don't match the reality and the outcome, okay? And there's a number of examples that have happened in medicine, throughout medicine's history, and certainly with pharmaceuticals, where we have new medications. In many cases, it's a new medicine that we hope delivers some clinical outcome, but it hasn't been proven to happen. Another example I'll just touch on quickly. There's something called the CAST study. Again, back in the 90s, after you have a heart attack, you are at high risk for having an arrhythmia, an irregular heartbeat that can occur. Okay, and in the 80s and 90s, physicians were giving a drug called two drugs, echinide and flecainide, that helped the heartbeat regularly after a heart attack. And the hope was that by regulating the heartbeat, it would prevent people from dying from an irregular heartbeat. And it makes sense, right? You give people a drug, their heart beats regularly, and you would think that they would die at a lower rate. A study was performed, an appropriate study, and what do you think happened? The medication was actually causing people to die sooner than if they were not taking the medication. So without proper studies and proper evidence, we don't know if the medications actually are improving health. They might improve a blood marker or maybe a pulse or a blood pressure, but we're not sure if they actually improve outcomes in all cases, okay? So we have to make sure that the clinical expectations, what we hope, is actually being borne out in reality. What's happening at the FDA? Are we moving in the right direction? Are we looking more diligently and avoiding these potholes? I don't think so, Okay, I started tracking FDA approvals back in 2011. There's more drugs are approved through an expedited approval pathway at the FDA than the standard approval. So back in the 1900s, when I was in pharmacy school, it took 2 randomized controlled studies to show a drug was safe and effective. One study to show that it was safe and effective, and then a second confirmatory study proving that that drug worked. We've seen right to try legislation being promoted, patient access groups, pharmaceutical manufacturers, and over the past 15, 20 years, there are now over 4 to 5 expedited approval pathways through the FDA. What does that mean? Quicker pathway through the FDA, lower standards of evidence to get to approval. And so what we're seeing now is that more drugs, more new medications are being approved through these expedited pathways, these fast-track pathways, than normal standard pathways. So we were concerned about this a number of years ago. What's happening? Oops. So this was in Bloomberg last week. For those that can't see, it says too many medicines simply don't work. Some drugs that doctors use are useless. And so they're actually, JAMA, Journal of Medical, the American Medical Association published a study on some of these breakthrough medicines, these fast-track medicines, and found that about 20% of them actually deliver on their promise. Okay, so the studies just aren't there. Okay, bottom line. So what do we do? What do we do? So what would you do? Let's make this a little bit personal. Which medication would you choose? You saw a TV commercial, and this is actually on TV. This claim is made on television. Apixaban reduces stroke risk better than warfarin, significantly less bleeding side effects than warfarin. It's the #1 prescribed cardiologist for preventing stroke and bad outcomes if you have an irregular heartbeat. So this is what's advertised on TV. When we looked at the evidence, when my pharmacist looked at the evidence, there's one clinical trial that supports this. And that study, unfortunately, had some significant concern in how that study was performed. So our pharmacists looked at the evidence and actually didn't have as much confidence in that particular claim. So what our team of pharmacists do, what we do, is we grade medication. So to actually have a group of pharmacists who sit down and read these journals and look for proof of effectiveness of how well these medicines work. We assign a letter grade and say, well, A to F, if there's proof that that drug delivers on its value and delivers on its promise. And so our team didn't have a lot of confidence in that study, and so we downgraded it. Now, the drug might ultimately be more safe and effective, but based on that study, we didn't believe it. So we're going to pause here. So I've hopefully painted the landscape of what the problems are, right? So what do health insurance companies do when faced with that dilemma? So prior to MedSavvy, I was the clinical pharmacy director at Regions Blue Cross Blue Shield, and we were innovating in how we covered medications. And what we did was, we had to manage the high cost of prescription drugs. We would raise deductibles. We would maybe put these drugs that were less valuable, not cover them on the formulary. We would require prior authorization. And every lever we pulled, well, prices just keep going up, don't they, right? And how did that make members feel if you're saying you can't have the drug your doctor prescribed? How would you feel? You would not be happy about that, right? So what we did, so now that this is the moment of transformation, right? So we see that the work that we were trying to do wasn't moving the needle in the right direction. So we had to stop and say, well, how could we make this better? I was at the Portland Convention Center giving a presentation on the scientific evidence of cancer medications, and someone in the back of the room stood up and said, I'm a cancer survivor. I would have loved to have that information myself when I was determining what treatment to use. Light bulb goes on. Well, rather than keep the information behind the scenes, what if we put it in your hands, the hands of the consumer, the hands of the patient, and let you make the decision on what drugs you would like to use, right? Put the information, would you make better decisions for yourself that fits your lifestyle and your family better than if someone behind the scenes was telling you which medication to use? So that was the concept of MedSavvy. So what's the new prescription? How do we fix this? We put the information of safety and effectiveness and cost in your hands so you could see and make the decisions yourself. Are you ready to do it? Are consumers ready to do it? The research seems to suggest that yes. In fact, consumers, patients, are becoming much more interested in getting involved in their care than ever before. They're more likely to have conversations with their doctors and pharmacists about asking about generics and alternatives, and not just taking the prescription that the doctor orders and, all right, I'll go ahead and take that, but getting more involved. Where do we need to give that information and make that information available? Well, who's got one of these? You all have one of these, right? So can we push that information out to you, and can you access it when and where you need it? Maybe you're in the doctor's office, maybe you're at the pharmacy, and you can look for an alternative. So that's the concept behind MedSavvy and what we're doing. So the idea behind MedSavvy is it's democratized pharmaceutical information about how well drugs work for what conditions that you can look up with your doctor and make an informed decision about what medications you would like to put in your body. What better place to do that than in Oregon? What better place to start that than in Oregon? So MedSavvy provides our services to health insurers and to employer groups to make available through their prescription benefits to inform the consumers around how medications work. What we're doing has not been done before. It's a little scary, right? We're calling the ball on certain medications about what we think, how well do they work or not, and that could be a little scary. It's also a little bit scary because it's never been done before. So I spent time with the pharmacy board and working with, how do we do this appropriately? How do we stay above board and make sure that we're playing by the rules? And Oregon's been a great state to work with in order to do that. So, so my ask of you is to get involved with your own prescription medication choices, whether it's for yourself or a loved one, and let's work together to improve how medications are priced and covered. I believe if we have a good, healthy medication marketplace, that competition among manufacturers will drive prices down. It's the obscurity that prices are kind of hidden and behind the scenes, and if safety and effectiveness is kind of not known, that allows the prices to go up. But if we're paying attention, we'll be able to fix this problem. Thank you.
Thank you, Doctor. I appreciate you mentioning several times that Oregon is the place for folks to start implementing change and introducing change. And appreciate your pioneering attitude moving here in the 1900s. Very, very nice. And really, I guess, at the core, your tool is your innovation is helping consumers make better decisions. So taking data and information that might already be out there, but maybe not be accessible or understandable, and putting it in a format for consumers to better understand and make better decisions. I think that's a great goal for innovation. So we've got a couple minutes now to take some questions. I know anyone who might be listening through the live stream can submit questions online, and let me know if anyone has. But let's open it up to the audience. Does anyone have any questions for any of our panelists? A couple over here. I think we have a microphone. All right, there's a microphone coming around to you.
Thank you, Doctor, for the information on MedSavvy. That's really interesting to me, and it's a really a neat innovation. One of the questions I just ask, and I don't study the issues very much in regard to that, but I saw that China is kind of focused on generic drugs, and there's some concern around manufacturers in the United States. Are you looking at that, and what are you seeing on the horizon with that?
Yeah, thank you. I appreciate the question. It is concerning. I mean, we certainly were seeing counterfeit medications coming in from China. They had drywall was packed into capsules, and the FDA. The role of the FDA is not only to determine which drugs can be marketed, but also to ensure the safety of the drug pipeline, the production pipeline, and the pedigree of that drug. But it is concerning. And as we're asking consumers what they're interested in, consumers are interested to know where their drug comes from and where it was manufactured. So it is something that we're looking at, frankly, because I'm not sure it's gotten enough attention. So thank you.
I think we had another question over here as well.
I have a question for you as well. Would you be open to disclosing your grade versus the cost of the medication so you're not influenced by your owner, which is an insurance company?
Yeah, thank you. So our owner is, so our biggest customer is an insurance company. It is a necessary distinction. We are independent. So our customers are payers. We don't have any benefit if higher cost drugs are used, unlike pharmacy benefit managers who the more medication claims they pay for, the higher dollars, the more money they make, right? Like, we are independent of that. Our grades are what they are based on the scientific evidence. And then the cost to the consumer is based on their health plan data, based on their health benefit. So we just call the ball on the grade, and then we'll pull in the cost data and that comes from the benefit, right? And we have had circumstances where there are A-graded drugs that cost thousands of dollars, but you know what? They're A-graded drugs. And we have inexpensive C-graded drugs and D-graded drugs, but it is what it is. Again, I believe that by putting that information in the consumer's hands, that's where the market forces are going to be generated. Right now, the market doesn't happen because you don't know you have choice. If you knew you had a choice, how do you make it? So what we're doing is we're illustrating what those choices are, and then our pharmacists are actually standing by. You can ask them a question, and they'll help you make that change. They'll work with your doctor and say, you know, this drug, is it an alternative for this patient, doctor, at this strength, at this quantity? So we'll help make that change. That's creating a market where you can actually make changes. So that's. But we don't take money from pharma. I don't make money if you know which drug is used. It doesn't matter to us.
Thanks. Any other questions from the audience?
I actually have two questions. I have one for the doctor. I went to Blue Cross Blue Shield and I was told they had like 50 pharmacists that do all this testing. Are you getting information from them? And also, you know how you have advertising and they advertise all this. How can you counter that advertising that people are seeing on TV?
So our pharmacists do communicate, and we do work together on looking at the scientific evidence. So the pharmacists that look at these issues are tasked at looking at the evidence. They're not tasked with negotiating drug contracts, et cetera. So, but it's my team that assigns the letter grades. It's my team that looks at the evidence and calls the ball on it. So that's a MedSavvy function. How do we counter? That's a great question, because what we see advertised on TV is hope. And what we are trying to do is share knowledge and empowerment and help consumers make decisions. And we're seeing that. We're seeing people kind of discover new information and say, wow, I found this other medicine on MedSavvy that has lowered my, reduced side effects for me, or it's more convenient for me to take, or what have you. So we're seeing consumers do that.
My second question was for Chris. Are you guys targeting millennials versus the baby boomers? Just out of curiosity.
Yeah, thanks. So it's an interesting question, and one that, from my perspective, is it working? Yes. Okay. The way we look at it on the digital team is we actually try to segment based on need or on the problem that the member might have. So regardless of their age, if they maybe they earn the same amount, or they like to pay their bills in a certain way, for us, as we look at the bill pay feature, they're the same. We're not as concerned about the typical demographic information, and we're more focused on needs-based segmentation and tackling what's the problem that we're solving, and how do we best solve that problem for the users. So that's my egalitarian answer. I guess you could also say that different aspects of our business are focused on different sort of age demographics, which I think is what you're referencing. Baby boomers aren't borrowing a ton. but they need a lot of investment, insurance, and help estate planning and doing those types of things. Whereas the millennials are maybe moving into better and better paying jobs and starting to move into become net borrowers from us. So yes, we have those segments as well, but on the digital side, we focus more on needs-based segmentation.
Thanks. We've got some questions down here.
So this is for Mark. You had six brilliant strategies for change, and there were only 5 on the slide, which I thought was innovative.
So actually, there were only actually 3.
I only got 3. I got agility, talent, and transformation, which I made up myself and tried to figure out whether that's where you were going. But what were the other 3?
They are actually agility, member centrism, diversified revenue streams, tech advantaged, the magnet, which actually, we have a pretty large subsidiary presence, and our goal is we do quite a bit of like insurance acquisition, P&C insurance, that kind of stuff in our marketplace. So we try to focus on being an employer that companies that are making decisions about being sold would look to us and say, why wouldn't we go there? So that's sort of theme 5. And theme 6 is give back. And give back is in the context of member give back, employee profit share, and community give back. We have a community foundation that we fund into for the Salem area. So.
Hi, I actually had a related question. I could go to Mark or Chris. Just in thinking about the competitive landscape, as a nonprofit entity, what are the challenges or potential opportunities you have as far as putting in and raising capital, leveraging capital to implement, disruptive technology or scaling that you think of at the forefront? I mean, I think of it as it might be a challenge, but there's also a lot of potential upside given how some of the disruptors are actually moving towards not necessarily a nonprofit model, but something more similar to what you guys are doing.
The most likely way we do that is, I think when you announced us, you talked a little bit about our CUSO investments. We often will, we're pretty active in looking at potential investors, whether they're fintech or other sort of key market drivers, like we mentioned, insurance. Insurance, if talking to an insurance group, so this is interesting from a P&C side. If you look at the business structure of a credit union or bank, insurance is somewhat counter-cyclical to the ebbs and flows of a bank or a credit union. So for us, as a strategy, investing in insurance is really good to keep organizational health. But we would look towards anything we couldn't do internally to lever that by partnering with others in the credit union space when opportunity arises. And we've actually done quite a bit of founding CUSOs ourselves with other credit unions investing into us. So we participate pretty heavily outside of just the core business model if they are things that are directly adjacent to our business model itself and can enhance it.
And I'll add to that quickly. From a digital perspective, our build or buy decision is always key. And when we look at this, the question that we try to ask ourselves is, what do we want to be good at? Another saying, here it comes. I tell my team all the time, we can do anything, but we can't do everything. So let's decide, what do we want to be good at? And if this isn't one of those things, let's find a partner who's doing it well, and let's work with them to integrate that product into what we're trying to provide. So on kind of a lower tactical level, that's how we try to make those decisions.
Oh, we have a question over here from the live stream.
A question from our online community member is for Mark and Chris.
What is needed for MAPS to change the run/change percentage?
I don't know. No, yeah, what we have seen, honestly, that's been most effective is the change in the decision-making process in the organization. Pushing, I sort of made the comment about the right voices in the right seats. When you have more of a full perspective on a very specific topic, and Chris listed out the subcategories of member experience, which continues to evolve and become a more complex organization unto itself. It's that where you find the nuggets to move forward in not only run change in technology, but run change across the organization, because it's not a technology issue alone. So each one of those themes was meant to sort of change organizational ideology at its sort of highest level. When you look at give back, keeping that constant focus on what's our return to member really sort of sets mantras within the organization, and those are the things that allow us to find ways to understand that change is more important. So.
We have time for one last question, if we have one.
I think I might be loud enough. Can you all hear me? All right. For Mr. Scott, with standard, I'm a broker, so my liaison experience is the employee talks to me.
We need a microphone so the online community can hear you. Thank you, sorry.
How accessible is your data if my employer is a client of the standards and it's all integrated? So an employee will talk to me, they'll say, hey, I've been out, and they'll usually call me about a claims issue, and I'll say, oh, you have the standard. Have you done all these other things? And they say, oh, no, I didn't. But the HR person doesn't even know to talk to them about that with the FMLA and everything. Is there a way to integrate that data and still maintain privacy so that there are certain data points that say, okay, this person looks like they're going to have this type of claim?
Yeah, so from an internal perspective, there's certainly some interesting things that, excuse me, that we're trying to do with some predictive modeling and data analytics just for our own internal ability to kind of look and see the shape of what might happen. I would say for an HR staff member, which I think is really what you're looking for, there's not a lot that we can provide to an HR staff member due to privacy issues, due to some of the information that we house that they don't really necessarily have access to. However, I would say there is some predictive modeling capability that we can assist with dependent on, and this is a lot of the structure is dependent on how they fund this program, if it's fully insured or if it's not. Access to information is a little bit different one way or another. There are predictive modeling and data analytics tools that we can give employers access to that is de-identified, right? So you can't get down to a specific member level data, but to help them understand their risk population a little bit better and understand what guidance they might need to be providing to their employees to help them be more effective through those processes. I don't know if that totally answered your question. We can talk more about this.
Well, thank you everyone for your great questions, and please join me in thanking the panelists for sharing. So we're going to take a short break right now. Please try to be back in your seats by 10 o'clock to hear from our next panelist. Thank you.
I'm not even a medical professional at all, but I enjoyed everything you said.
Oh, excellent.
I'm telling you.
Well, thank you very much.
Yeah, it was fantastic. So how old are you, by the way?
How old am I?
Yeah.
45.
I was thinking, I go, you look so young up there, but man, you're so sharp. You know?
Thank you. Here's my card. If you need anything, email me and get you access to MedSavvy.
Okay.
So, yeah.
Do you guys have Did you have any part of your training or education at all in the Phoenix area at all?
No.
Okay. Oh, my buddy's teaching doctor for pharmacists down in Phoenix.
Okay. Yeah, they have a couple because there's a couple of pharmacy schools in Arizona. Right?
Yeah. He's just, to me, it's just, thank goodness, there's no big deal. Everybody else is, we'll just salute this guy, So, anyway, thank you so much, Sean. I appreciate it.
Thank you. Appreciate that.
So while you were speaking, I was texting my daughter, who's in her second year of pharmacy school, just wrapping up.
Oh, is that
I
right?
said, you need
Where
to
is
check
she?
this out. She's at OSU. She actually spoke with you a couple weeks ago.
Okay.
And you left
What's
an
her
impression.
What's her?
Sadie Manley.
Okay.
Or Sadie Mackin. She's but anyway, she
Okay.
said a couple weeks ago.
So she might have been at the innovation conference.
I think so.
Yeah, that's awesome. Well, I'm excited to work with some of the pharmacy students and get them using MedSavvy and getting their feedback. So
Yeah, I think it's exciting.
awesome. Well, have her connect with me on LinkedIn. I'm not sure
I'll
we
do that. I'll do that.
Yeah.
Thank you.
Nice to talk to you. Thank you.
I like your, and I wanted to ask you about I like to thinking about having the people. But what I'm finding is like I try to give you everything so you have to push it. So the old writers.
Yeah,
So what you did is certain vendors that have given me the prescription. I have this thing just delivered to me.
Oh, is that right?
Yes! That's the new information. She just mentioned, okay, we're going to do this service, so I thought that we go to it would be like 2 weeks, a couple of weeks later, I thought it was
Wow. So what's interesting about that is that there are performance metrics that any doctor is publicly helpful to say that because if you have a
yeah.
you have to be as a player that doctors would have no score by that. And so
but if it's, for instance, a lot of people, because I dealt with it, I healthcare assistant. And I checked their blood pressure. A lot of people fall because their blood pressure is low. And then when I told her, she said, I've been falling. Then I get this and fall. She said, I didn't have blood pressure. I said, yeah. So I checked her blood pressure. I said, for this, I gave her a test. What this certain number. And other things. Yeah. So I said, take this to the doctor. She took it. Anyway, so my thing is, are they doing anything with that? Regulating the efficacy of that? And how is it going to? I know it's going to be and
the dilemma is that they're not manufacturing, so oftentimes they're not exactly so it's hard for us to make the call. But there are resources. There's a company out of Canada. I cannot think of exactly with vitamins and so they I don't know that they would sign up everything, but they have a bunch of PhDs that review the literature and they say here's what the drug is for the product, here's what you're going to do, and here's the risks and harms. And they they're similar.
Okay, wonderful. Sorry. Okay, my company is a company. I'm coming from company. I discovered something that is on par with stem cells. It's embryonic in factor, but it's natural. How do I get it to bridge that gap to the doctor? It's so. I work with diagnostics.
From my perspective, it's all about the study.
Published
the study, get the evidence, but
yeah, I have the study. The study before conference presented by a world scientific group, We said to them, but in Iraq, that's
That's the whole industry set up to help them.
really?
Oh, yeah. Yeah. Here,
Yes.
that's not
Thank you.
I just have a real quick because I kind of remember, I don't know if you were there when I went to the Blue Cross Blue Shield and they had a big talk there. You know, you guys had 50 pharmacists there and you all gave all these rates. It was downtown at the headquarters.
How long ago?
5 years maybe. And it was fascinating because you gave all the drugs, the A's through the ads. So do you use that information from them, or do you do your own?
So it's changed a lot in the past 5 years. So we do our own, right? So our pharmacists do really compete with the pharmacists, but you know, we hey, what do you think about it?
Yeah.
But you know, our team is doing all the stuff that's Med Savvy is like.
So then how do you have to make money? How do you do that? Just by people paying you to do the studies, or how does that work?
Yeah, so our pharmacists are reviewing the studies that other people have performed. Right?
Okay.
We summarize our assessments of the studies. But how we make money is our companies, our health plans, employers who are buying Med Savvy services for their members or for their employees.
Okay.
And so it accompanies the pharmacy. So they'll buy the prescription benefit, and then they'll buy Med Savvy and you layer on top.
So can individuals get on to Med Savvy?
For some things. So, we'll let you in.
That's what I was going to ask you. Which insurance companies and can individuals access?
Primarily regions. Hi.
Okay.
Sean. Nice to meet you, Don.
Your website is impressive. As an agent, though, could I give you?
Yeah, just contact. I think we have a demo. It's been changing, but I believe we have a demo section for brokers, agents, etc. And if you need more, just contact us.
Okay. Are we able to add your site to the website?
We can, yeah. We'll have to talk. So Med Savvy is blocked down right for our customers, but we designed it so that we can do single sign-on from employers or from the health plan. So for those customers that buy it, they can click on their portal, whatever their portal is, and then they just launch it on Med Savvy.
All right, thank you.
Yeah, of course. Nice talking to you. Hi.
Question for you on just kind of more the technology side and kind of that supply chain integrity, like we were talking about with China or something else. Just curious, like, do you see the kind of the trifecta, or kind of look at like blockchain, maybe RFID, some other things that could be integrated potentially?
There's a lot of work being done on that in RFID. Yep, like buy pill bottle. I mean, there's a lot of that work. But then the question is, even still, like even if you know that, where do the ingredients come from? Where does it assemble? And so we're starting to look at that. I mean, it's been less of an issue historically. I mean, the fact that the drug might not be proven is like a big enough issue, right?
Yeah,
and now you got to worry if it's poison. So we're breaking it down little by little, like that elephant you're talking about. But it's a little bit concerning because what we're seeing. I mean, this is a regulatory issue too, as we're seeing such consolidation in the raw materials, where those raw materials are sourced from, right? And there's fewer and fewer generic manufacturers, so it's concerning. And we need a healthy marketplace, right? We need enough competitors. Yeah. So that's part of what I want to do is raise awareness so that people are paying attention to these issues. Oh yeah, absolutely.
I don't want a hard time.
Yeah. Well, nice talking to you.
It isn't a drug per se, but it's the greatest thing since sliced bread.
Is that right?
Because instant blood sugar. I do not have to scab. I don't have to take blood. I can do this 10 times a day if I want to. And because
recorded,
it's in here. Now I have a pump and it doesn't sync to my pump because it's not a Medtronic. However, I just go in my pump, enter the number, and it's saved into theirs. All the records are there, and there's no having to go out to someplace else and print a report. We need that kind of garbage again. What it's doing is causing you not to run over, which used to be a huge problem. You know, I don't have guys.
This is actually less expensive. The deal with the house rate is and yet it's not something out there that you know is available. When I went into they were going to charge me what they had charged me for the initial pandemic. And so trying to see people who are not necessarily educated about how to do that sort of that education piece of just how to manage the process
And one of the things we were seeing, people look up their price and they're like, you're paying a lot more. You know you're paying a lot. We are not in a healthcare. We have a healthcare
If everyone could please start making your way back to your seats, we'll move on with our program.
They were advertising my impression is
Anyway, so I work with Medicare insurance beneficiaries. I'm a Medicare insurance agency owner, and so that's why I'm like, this is fascinating. Are you contracted with like United Healthcare and not yet? Yeah. Okay. All right. Thank you so much. Nice talking to you.
All right, thank you, everybody. So let's jump right back into that. We're very pleased to have with us this morning Treasurer Reed. Treasurer was elected Oregon's 29th state treasurer in 2016. He previously worked in the U.S. Treasury and as a liaison between designers, engineers, and manufacturing units for Nike Inc. In 2006, he was elected to the Oregon House of Representatives, where he served for a decade and championed legislation to invest in public education, improve state financial management, finance critical infrastructure improvements, and help Oregonians save for a more secure future. While in the House, Treasurer Reed was elected Speaker Pro Tem and earned the chairmanship of the House Committee on Transportation and Economic Development and the House Committee on Higher Education, Innovation, and Workforce Development. He also served on the House Revenue Committee in multiple legislative sessions and was a member of the Joint Committee on Ways and Means, the primary budget writing body for the legislature. Please join me in welcoming Treasurer Reed.
Thanks, Andrew, and good morning, everyone. I was asked to talk about innovation, but instead of talking about that in the abstract, I want to talk about something that we're already doing in Oregon that I think qualifies as innovative. First, the problem. According to the National Institute of Retirement Security, the gap between what is saved for retirement and what's needed is at least $6.8 trillion nationally. At the same time, more than half of the private sector workforce in the United States lacks access to a retirement savings plan at work. In Oregon alone, with a working population of about 1.8 million, there were about 1 million people in the private sector without that access. And that matters because research by the AARP shows that workers are 15 times more likely to save for retirement if they have an option to do so at work. And that matters because people who save for retirement will have a better retirement with more choices and they'll need less from the state budget. Before I was elected state treasurer, I served in the state legislature, as you already heard. In 2015, I sponsored the legislation that led to the creation of the Oregon Retirement Savings Program, which is now known as Oregon Saves. And the state treasury is now implementing Oregon Saves, the first in the nation state-based auto IRA program. It was created in response to this growing retirement savings crisis. So first in the nation, I think that counts as innovative. And it's a little bit of a risk for a newly elected statewide official. So I want to tell you about that experience. As innovators, we didn't have anyone to look to for lessons learned. There were a few other states that were somewhere in their own process of developing a state-based retirement plan, but we were and are out in front, and sometimes that's a little bit lonely. And believe it or not, there was some opposition. The legislation passed in 2015 without a vote from the other party, and there was active opposition from the private sector, both locally and nationally. But we were not willing to wait, not willing to put the power of saving on the back burner for Oregonians. Now, for those of you who might not be familiar with this, I also want to give you a little background on Oregon Saves. It's an easy, automatic way for Oregonians to save for retirement at work. Workers at an employer that doesn't offer a qualified retirement plan can automatically enroll and start saving in their own personal individual retirement account, an IRA. It's also a public-private partnership. It's overseen by the state and managed by a private sector program administrator with extensive experience in the financial services industry. Very similar to how the college savings plans, or 529s, are structured. Oregon employers without a retirement savings option are required to offer Oregon Saves to their workers. Participating workers contribute to their IRA with every paycheck. And those IRAs are tied to the worker and not to the job, which means that the account is portable and what you save will always be your money, always under your control. People can opt out if they want, but most people are staying in, 3 out of every 4 eligible workers. And what we're doing is embracing what Nobel laureate Richard Thaler called, I always like this term, libertarian paternalism. The idea that it's both possible and legitimate for private and public sector institutions to collaborate in pursuit of positive behavioral outcomes while also respecting freedom of choice. And of course, besides embracing this idea, we're actually implementing it too. So as we began to build Oregon Saves, we knew that we were going to be presenting people with something they knew they should be doing, saving for retirement, but that many had not yet done. So we had to consider how we were going to structure this program, how many plans we would offer, and knowing that many people had never saved before, it was really important for us to make it as easy as possible. We chose a Roth IRA because people can withdraw their contributions at any time without penalty. And this is a really important design feature for new savers because many of them lack an emergency fund to weather the financial shocks that can confront all of us at time to time, whether that's an unexpected car repair or a medical bill. We also made it standard that the first $1,000 that a person saves goes into a capital preservation fund. This is the lower risk, lower return option of our 3, and it serves a dual purpose. First, it keeps our participants away from market volatility in the early months when they're new to the program. And second, it ensures that if a person is automatically enrolled and decides soon thereafter to withdraw from the program, they can quickly access all the funds that might have been contributed. Now, contributions beyond $1,000 automatically flow to a target date fund that's based on the participant's estimated retirement date. They can choose other options, but that's the standard path. So with that savings vehicle and lineup decided, we turned to facilitation. We recognize that most businesses are focused on running their business. Like my favorite sandwich shop, when you come to Beaverton, you should all go to the Beaverton substation. It's great. Chuck Wilson is the owner there, and he says it really succinctly. He said, I'd love to have a retirement plan for my employees, but I don't have an HR department. I got sandwiches to make. So from the start, we knew that our success was going to rely heavily on the relationship we had with employers throughout the state. We constructed the program to limit the requirements on employers as much as possible, and we're always looking for ways to decrease the time that employers have to spend facilitating the program. We decided that the best way to find out how to make this process as simple as possible was, for both the saver and the employer, was to start small. So we did that by launching the program with 2 pilot phases, where we were able to give one-on-one guidance to both businesses and to employees. And just as important, we were able to listen to them and learn from them as well. We learned a lot from those pilots, and that helped us when we began our statewide rollout. Lessons have also helped us as we've worked with our partners and our stakeholders. So with all this background, I imagine you might be asking, where are we now, almost 2 years after we launched those early pilots? I'm happy to tell you that there are tens of thousands of Oregonians saving, and together they've now saved more than $20 million for their retirement. We're very proud of that, and we're just getting started. But these folks are not just saving. Beyond dollars, participants in Oregon Saves are accumulating and gaining some peace of mind. One guy that's always in my mind is named Bud. He's an employee at Mount Ashland, the ski area down south. And he told us pretty clearly, before Oregon Saves, he didn't know what to do about retirement, how to save. He felt intimidated. But he says now it's starting to pile up. And he says every time he looks at his statement, he smiles because he feels like he's getting ahead. And I think that's a good summary of the experience of what we're aimed at. And I think I would go so far as to suggest that's something close to what we want for all of our fellow Oregonians, the chance to save their own money and build the life they want. Employers also see the benefit of Oregon Saves. Josh Allison is one of the owners of Reach Break Brewery in Astoria, and he told us that Oregon Saves allows me to offer a retirement plan to my employees, which I would have a difficult time providing on my own. As a small family-owned business, it gives me the tools to recruit and retain good employees. It also gives my employees the ability to work for our company as a career. It's a win-win for all parties involved. Business associations have appreciated the work we've done to address the retirement savings crisis while listening to their concerns about how to do it. At a recent hearing in the Capitol, a lobbyist for several business interests said something really nice, and I feel fine bragging about this a little bit because it's really a credit to our team that's worked so well in the implementation and in the legislation that this quote was about. This person said that the Treasurer's Office has been incredible in the implementation of this program. They've worked tirelessly with us throughout the rules process to ensure that this is easy to implement. My clients are excited about it. Their employees are excited about it. It's not what I thought I would have been telling you 2 or 3 years ago. So I feel really good about what our team's done and the relationships that we've built. And the public supports Oregon Saves. Based on a recent public survey by DHM, an astounding 82% of people support Oregon Saves. We're really proud of that as well and striving to continue to earn that confidence. We're no longer the only state with a state-based retirement program for private businesses and employees, but we'll always be the first. And importantly, what we're doing is helping to lead and motivate other states to do something important that helps solve a problem and helps people have the tools to build the life they want. I think that's innovation that we can all be proud of. But I think in a broader sense, the important thing to remember is that innovation is not just the glamorous stuff. It's not just being able to stand in front of a group like this and tell a fun story. It's often a grind that is what is necessary to turn the spark of a good idea into something that can last. And I think it requires building that on a base of something that's really aimed at solving a problem, something real that people confront in their daily lives. I didn't come up with the idea that saving was a good thing, but I was able to use the position I had as a state legislator to spur the state into taking action. And then our team, staff and advocates, worked with stakeholders to design and implement the program. And now we're getting the help of program participants to help tell the story of how easy it is to save. I want to leave you with a passage that I encountered a while ago. It's inspired me to try to continue being an innovator and a collaborator. I think it applies to just about every challenge we face. And I think it's good advice. I think it's inspiring, and I hope you'll take it with you out into the work you do. It goes like this. Think bravely. It wasn't one person that went to the moon. It was a nation. The internet wasn't built in a day or through one stroke of genius. The world can't afford to wait for the next Einstein or solve its problems using math alone. The big answers come when we all push forward, together. It takes courage to go forth alone. It takes more courage to convince others to follow. This is the next great challenge for management. Build the crossroads where ideas come together. Shape organizations that will move them ahead. Find the cure for the common committee. We believe the world can be bravely led. Thanks for your contributions to innovation. I'm glad to be with you, and I'm told we have some time for questions if any of you have them.
Thank you very much, Mr. Treasurer. And so the Oregon Saves program is most certainly an innovative solution and a model for the rest of the country. I think we can all be proud, and thank you very much, that in just 2 years, Oregonians put more than $20 million away for their future. So that's very good. We do have time for some questions from folks. And while I'm walking over there, maybe I can ask you one. Sure. Now that you've solved the retirement problem, what's next? What's the future looking like for the Treasurer's Office?
Well, one of the things that we're really excited about in this general theme of trying to create a culture of savings is making the college savings plan more relevant for people. Hopefully all of you know about this, and any of you that have an opportunity to save or tell others to save are doing that. But as many of you also know, there is a tax advantage for college savings contributions. Right now it's a tax deduction, and that's fine if you're fortunate enough to be amongst the group who get to itemize your deductions. It's not so useful if you're not. So there is a proposal in the legislature, and I've got my fingers crossed and our team working very hard to get it across the finish line, that would switch that tax deduction to a refundable tax credit so that it would be accessible and meaningful for people across the income spectrum. Here's another of my favorite stats, just having a college savings account makes a child 3 times as likely to go to college and 4 times as likely to graduate from college, regardless of how much is in that account. By the way, it's not just college, community college, trade school, everything else is perfectly appropriate too. So as an investor, I think that's a really good thing for us to say as a state to every kid in Oregon: you're capable, you're worthy, and we believe in you. So that's another high priority for us. I see someone with the microphone.
First off, thank you for all the information and time.
Thank you.
So I kind of have a 2-part question.
Sure.
First of all, as far as Oregon Saves goes, is there an ideal size for the company? Is a minimum of revenue or employees? And then as that company grows, do you see larger companies exiting the program to go to private platforms, or could the program actually facilitate growth of a company up to one of the larger ones in the state?
Well, ultimately, we want everyone to have access one way or another, and we would say that this can stand next to every other approved kind of structure for retirement savings. We view it as a win when someone gains access, whatever format that is, and there are a number of cases where we hear from business who says some version of, well, I always meant to get around to this, and I never did, but now that I'm required to do something, I'm going to do my own thing. The IRA is not a perfect structure. It has relatively low contribution limits, although for most of the people we're serving, if they got to that limit, it would be a really significant achievement. And an IRA does not allow employers to contribute as well. So it's not perfect and it's not for everyone, but it is a real advantage for some small businesses like the Beaverton substation that doesn't have an HR department and doesn't want to have to deal with that piece of it. So the point for us, I think, is to support the establishment of a savings culture and give everybody access. But it's an IRA, so it can go as big as the employer wants it to be.
Thank you.
Thanks.
Is there a penalty for small businesses? I don't think I got if there was a employer limit. Is there a penalty? And if so, I feel like we don't hear enough about it. So I'm curious if employers are aware of it out there.
It's a good question, and when we set up the pilot phases, we also set up a schedule. So we started with large employers first, and we're calling them waves. There are different waves that are coming. So the smallest of small businesses, their wave has not yet come due, but that's coming, and that's one of the challenges for us in implementation is how to communicate with small businesses. So we're eager to have your help on that. We're doing all the things that we can in terms of traditional channels, non-traditional channels. We'll show up at any association or chamber of commerce that people will have us and talk about it. There is a small penalty down the road, but it's very much set up in statute as a collaborative message of saying, here's this program, you need to comply, but we'll work hard to make it easy for you. It's not a gotcha thing. It's much more about making sure that people have the chance to know about it. One other important point to back up the earlier observation around small businesses is that there's no reason that a small business has to wait until their wave comes due. We've got, I think, about 2,000 businesses now that have seen this as a benefit and decided to enter the program early because they want to offer it to their employees. So we got lots of work to do to communicate with small businesses around the state, and we'd love to be in touch with you about good ways to do that.
We've got time for one more question.
That's it. They're done with me, I think.
Well, everyone, please join me in thanking the treasurer for joining us. Okay, well, let's jump right into our next panel. If we could have our panelists please come up and join me on the stage. So what we're going to talk about next is blockchain. And to introduce the issue a little bit, so blockchain is a lot more than just a buzzword. It's really the next step to secure digital commerce. As regulators, we support a secure financial infrastructure that creates a safe and competitive business climate and secure financial options for Oregonians. So up next, joining us now is a group of leaders in implementing blockchain technology. Hopefully they'll explain what that means for all of us. A facilitator for this discussion is Kara Snow. Kara is the Chief Community Engagement Officer for the Technology Association of Oregon. She began her career in technology as an in-house recruiter for CTS, a regional technology consulting firm, before joining the Technology Association of Georgia, where she became the first Chief Development Officer, leading funding initiatives and community engagement efforts to educate, influence, and unite Georgia's innovation economy. She's earned numerous rewards and is very active in the community, and we're very glad to be joined by her today. Kara, I'll turn it over to you.
I have to lower this because I'm short. Good morning. That was weak. Can we try again? Good morning. Much better. I'd like to point out that the future is in blue jeans and blazers across the board. So we are also the Blockchain and Beyond band. So that's what you can consider us for the next 45 minutes. Thanks for having us. When Aaron approached me and said, would you like to talk about blockchain? I said, well, sure, that is going to be more of a question of what is blockchain, but I know some really smart individuals that are running companies and leading this. And we started talking about how we see blockchain and future tech trends being brought into finance and insurance organizations, because there's all these things that you can be doing now. We know that you can fractionalize value, you can increase security, you can create transactions of the future, share a ledger, parse things out that were not parsable. And it seems like a lot of things to try and tackle in 45 minutes. So we're going to start this by having our panelists introduce themselves from Josh on down. They're going to tell you who they are and what they do. And then we're going to go through a series of questions that are going to basically explain some of the tech behind this, and then not just blockchain, but what we see in the future, and how you can take those tech trends and incorporate them into highly regulated industries. So I'll hand it over to Josh.
Hello, I'm Josh Windroth. I head up strategy for SeedPay. We're a new insurtech company, and we're working on changing the way consumers and businesses pay and get paid. I've been in various forms of fintech for, boy, about 20 years, I think, before it was called fintech. And I run the fintech's PDX group here in Portland.
Hi, everyone. So I'm visiting faculty at Portland State University, and I spend most of my time as an independent consultant, primarily in implementing blockchain and one of the subsidiary kind of technologies called smart contracts in spaces like insurance, also moving into other ways in which we can leverage these technologies like digital identity verification and supply chain management. And I've been really excited about the fact that Oregon specifically, and Portland in particular also has been seeing a lot of innovation in this sector. I've testified a few times here in the state legislature for the blockchain task force, which is being formed, and new kinds of regulation that's going to help that innovation. Sorry? And my name is Alvin Sheff. You have it.
Hi, Trevor Dreyer. I'm the co-founder and CEO of Mirador. We're a small business lending platform that we sell to regulated banks and credit unions to help them do more efficient and profitable small business lending. And I've been in, I guess, in the fintech space for the last decade in various companies. And Mirador was just recently acquired by Q Mutual, so now I'm kind of getting to know a little bit more of the insurance space as well.
Good morning, everyone. My name is Siva Narendra. Before I wore jeans and blazers, I was a pocket protector wearing geek that learned to wear pocket squares. I am CEO and co-founder of a digital trust company called Typhon. We have 3 lines of businesses. The one that we have commercial deployments and profits is in building digital transaction systems, digital banking systems for credit unions. We built it actually with credit unions. 2 out of the top 10 credit unions worked with us to build it. Now we're deploying across the board. The second line of business is really bringing that digital trust into not loss of money, but industries where loss of data might lead to loss of life, like protecting power plants and connected cars. We're doing some early work in blockchain over the last couple of years, and I'll share some of my thoughts here. So thank you for being here.
Awesome, thank you. So we're going to start with you, Alvin, and this is a question for everybody at the table, because I'm sure you all have an opinion about this. But in your opinion, what's the big deal about blockchain?
So how many people here know what SMTP is? It's about a third of the room. So that's actually good representation. Most rooms, it's only a few people. But for those who don't, it's the simple mail transfer protocol that most people don't necessarily know the nuts and bolts of, but we all use email, I presume, right? And that's the system that email is based on. And in a similar way, blockchain is often described as a protocol, much the same way as SMTP is. And so that's why I actually don't expect that in a day-to-day life, we're not going to engage with technologies like blockchain the way we engage with things like Twitter, or we engage with automation, IoT devices and things like that. It's going to be in the background, but it's providing for new forms of trust and security, and allowing us to collaborate in ways that we haven't actually been able to do in a digitally native way. So a lot of things we do today when we transfer money or we develop products, we basically tag on to existing digital technology or digital forms of communication. What blockchain is allowing for is making it possible to do those kinds of transactions, like transmitting value, completely through a digital system. And I think that's a big sea change from how we've been doing things in the past.
Trevor, you want to add anything? No. Siva, Josh?
I think I wouldn't mind quickly going through the slides that I created to give some background.
That is a perfect, that's our next question. So you perfectly timed this. Talk a little bit about the history of the ledger and then where you see it going.
Great. So about 400 slides, and that'll be a Q&A. So let me quickly touch on sort of the, thank you. Let me quickly touch on, the trends in innovation in finance that culminates in blockchain, and then summarize some of the realities that you should consider if you're considering blockchain. But before I jump into the presentation, I wanted a quick show of hands. How many of you are interested in blockchain? Okay, quite a few. So just a brief summary of blockchain, it's just a mathematical model for creating greed, right? Mining. And I'm not kidding, that is what the innovation in blockchain is. So let's actually look at sort of the trends first that culminates in blockchain. So the way I see trends and innovations in finances, the very first innovation, and there's some uniqueness to it, is the double entry bookkeeping, right? And what's unique about it is the data is analog and it's distributed, so you have your ledger and I have mine. And we write it. It's difficult to copy, certainly it's created productivity, but not as well as digital data did, which came about 500 years later. It actually changed both phenomena. It was not distributed, it was centralized, right? You didn't have yours, I didn't have mine, somebody else had all of ours. Which made it highly productive. You could bring scale. You hear that as cloud today, which is it's a shared resource. And the data was digital. So instead of distributed analog data, now we have centralized digital data. There are certain benefits in digital data. There are certain benefits in distributed, which is really what the next innovation that happened about 20 years later with Bitcoin becoming the foundation of blockchain. So you have distributed digital data, right? So that's where we are. What I would like to do in the next a minute or so is to talk about the reality of digital data and then the reality of blockchain, right? If you really look at data, there are basically three different kinds of data. Information, how much money, transaction, move my money, identity or keys to protect it. This is me, therefore move my money, right? The data can be stored or it can be in transit. Now, one thing you have to remember from the analog ledgers of double entry bookkeeping to the digital data is there are no boundaries. So, you really can't say where your data, do anybody know where your email is or where your bank dollars are stored, right? It's a difficult thing to know. There are no boundaries, which actually makes it highly productive, right? You can be in China and move money if the Chinese government will allow it. So it becomes really important to protect the data. And the way to protect digital data is, I'm sure you've heard of the word encryption, right? This is where the test is going to be, right? Okay. So encryption is a digital lockbox, right? Forget the mathematics behind it. It's a way to lock your data. Now remember, if you lock your data and if it's your data, the person that locks it needs to unlock it. That's called decryption. So encryption is very, very useful to secure data, but it isn't enough if the keys are not kept safe. So one of the things that you need to ask is the reality of it is, where are the keys? Do you have your keys? Do you know where the keys are? That's the challenge. The reality of digital data today is the nature of data being unprotected or maybe unprotected. So that's a reality that you need to consider. That comes immediately to blockchain because blockchain is supposed to solve some of this. In the traditional world, all data were stored centrally, right? This is the world we live in today. What blockchain is doing is it's supposed to decentralize or distribute all of them or some of them? All of them. But that's not the reality. The reality is, take Bitcoin. While Bitcoin has multiple nodes that has multiple entries, so the same entries in every node as a ledger, the wallet providers end up providing all of that centrally with a password or back up your keys. That is the problem. So not only do traditional systems need decentralization of keys, blockchain as well needs it. So the reality of blockchain is, as it turns out, unfortunately, while it should be decentralized, it has re-centralized some of it. So that's another consideration reality that you'll have to look at. So I'll stop here.
All right. Everyone understands there will be a test, and you can't eat lunch until you pass it. Okay, good. So now that we know a little bit about the technology, Josh, We're talking about disrupting in highly regulated industries. How hard is this going to be to regulate?
Impossible. It's going to get really weird over the next few years. I felt really old the other day because I realized that my kids are going to understand money in a very different way than I do, right? They're going to have and I'll understand it logically, right? But it will never be natural to me, the stuff that's going to be natural to them, because there is a monetary revolution coming similar to the Industrial Revolution that's spurred on by a lot of this technology, and it's going to get super weird. So, like a simple example, right? So take Starbucks points, rewards points, right? You all have your Starbucks cards. They have value. I can go buy coffee with them, right? Well, now a lot of these companies are starting to tokenize those or issue their own currencies. Burger King, for some reason, issued their own currency, right? For some reason, it's a lot of the fast food restaurants that are doing it, but they've got their own currencies. Now you have private companies issuing their own currency that has value. Well, what if you can trade that value, right? Now you start to layer in other assets like real estate is starting to be tokenized, right? Where you can actually trade tokens that have a title to a share of a piece of real estate or insurance. It's being tokenized. Or there's either more exotic ones like you can buy fractional shares, tokens that represent a fractional share of ownership in paintings or exotic cars, right? So now you have all these different means of value, and they're going to be traded, right? So at some point, my kids are going to say to me, Dad, why are you using that digital wallet? It's so slow, and the exchange rates are terrible, and right? And they're going to have to explain to me how I use my Starbucks points to buy something at Home Depot or to like go purchase something else. And in that kind of environment, how do you regulate that, right? So how do you come up with the means to regulate when you can tokenize almost any asset, and you can trade that and exchange that? Your world gets really, really complicated. And insurance is going to be impacted by this as well, right? So you're going to have insurance products, tokenized insurance products that act like currency. You're going to have smart contracts that automatically issue, automatically execute and do claims. Well, how do you handle disputes on that? So I think the fintech and insurtech developments that are occurring now are going to be the biggest issue that regulators have to deal with for the next 10 years. I mean, just trying to keep up with that, budget-wise, training-wise, the trying to keep up with technology now is hard. In the next year, the next 3 years, 5 years, 10 years, I don't envy the job of regulators at all, because it is going to be damn near impossible to keep up with it.
Inspiring. Wonderful. Really great. Okay, so but in that vein, Trevor, what are these next trends? How is fintech and insurance going to continue to be disrupted?
Yeah, and I think that agree completely with what Josh says. Well, in the past, a lot of innovation came from within entities that were already regulated. So you think about like the birth of the credit card system came from Bank of America, and then getting a lot of other regulated banks to join on, and the credit card system was born. ATMs in the past, all these innovations kind of came from within the industry. Now we're seeing it come more from outside the industry, and it's even starting to disintermediate central banks, governments, when you're having currencies that now are no longer can be controlled by a government or a central bank. And so unless you kind of get out to, you got to kind of regulate everybody out there that's engaged in any kind of commerce, it's going to be, I think that is going to be the key challenge, kind of where you draw the line. And I think that when you think of trends in fintech, it just makes it even more challenging for regulators as well. So I have kind of 5 I pulled out that I've been seeing in the last year or so that continue to shape it. One is, I think that is good news for regulators, is the big banks are really starting to get back in the innovation game. In the past, during the recession, they've been so focused on compliance and regulatory compliance and kind of working out some of the issues that happened, that innovation just kind of shut down. But now, to give you a quick kind of couple points here, Chase, for example, is employing now 30,000 software engineers, and they're spending about 11 billion on technology. Bank of America is spending 16 billion. So these big banks are starting to kind of get back into the game. But one thing that's interesting is they're not typically sharing their innovations with the smaller banks and credit unions like they did in the past. You're not seeing them kind of offer a lot of these innovative solutions through correspondent banking services. So that puts a lot of pressure on the smaller institutions to really be able to partner. And that's an area where I think regulators can really take the lead in kind of helping figure out how you can make third-party vendor diligence, how you can make it easier to partner with fintechs and third-party providers, while still making sure that you're maintaining the safety and soundness of the banking system. The second trend, which I think is a big one, is with the rise of millennials, there are a lot of fintechs that are starting up to really cater to their needs and their kind of worldview and paradigm. A couple of them. One is there's a much more of an emphasis on kind of social responsibility or social consciousness when it comes to your finances and investing. So there's a whole bevy of startups that I think really wouldn't have existed a generation ago. Just to give you a couple names, one is called Ethic. It really helps wealth advisors screen investments and stocks for alignment with a person's own particular social missions and goals, for example. There's another one out there called Measurable, which helps you get understand the actual environmental and other impact of real estate investments, whether it's your own personal home or rental property. So I think we're starting to see some of these trends as well, along with managing high cost of living and high student debt. You now are able to, if you're millennial with 2% down, go to a startup called Divvy. They'll purchase your house for you. If you're looking to purchase your first home, you put 2% down, and then every month you pay Divvy rent, and a portion of that rent goes into the equity of the house. So it's really kind of a rent-to-own business for the house. And so with these needs that millennials have, the interesting thing is it's really kind of going around the traditional players in finance and the banking system. And so I think that's a trend that I think and would expect that traditional players will kind of start catching up and starting to offer new products that really cater to more of the millennials. The third piece, which I think is a positive trend as well, is really, I call it the unbundling of the paycheck. You're seeing a lot of companies now start to kind of tackle certain problems that have come from the traditional way that most people get paid every 2 weeks in a paycheck, kind of direct deposit into their account. So for example, there's a startup called Gusto that allows somebody to get paid basically at any time. They're not stuck at getting paid every 2 weeks. So if I've worked in an hourly job and I've earned a certain amount of money over working this past week, I can go through Gusto and get paid out immediately for that and not have to wait for my employer's normal payroll cycle. It's really aimed at trying to avoid that payroll lending. And these companies are starting to partner with Walmart and kind of big employers as well. Fourth trend I've seen is that the big players are kind of getting bigger and really expanding their reach. So you have players that were traditionally, for example, in kind of investment and robo-advisors now that are starting to offer other banking services, deposits, lending, et cetera. You're seeing Amazon getting into lending in a big way, and potentially exploring getting a banking license and offering checking accounts. There was a study that Bain & Company recently did that found that over 2/3 of Amazon's 110 million Prime members would try a checking account from Amazon. So that's, I think, a big shift that people are much more willing now, and I think especially younger folks, to kind of trust non-traditional players in financial services with their money. And then the last one I'll say is that there's a lot of talk of AI recently as well. I think within fintech, it's going to start being more ubiquitous, but it's not going to be a huge sea change like some people expect. It will be much more incremental. For example, underwriting is not going to be completely done algorithmically probably anytime soon, but yet there's additional insight that can be gained from looking at new data sources and looking at far more data points than a manual underwriter can look at that can help inform the decision, help manage risk a little bit better. And as the large technology companies like Google and Amazon and Microsoft, et cetera, are opening up developer toolkits where now you can see, you can use data science APIs and a lot of AI kind of capabilities without having to understand the underlying data science. It's starting to make these capabilities in predictive analytics much more available. You'll start seeing that kind of crop up. So from a regulatory standpoint, I think these are all exciting trends in that they're kind of delivering on customer expectations and they're kind of getting to better outcomes for consumers. But I think the challenge is going to be, how is this done in a way that is equitable, is transparent for the consumer, and doesn't kind of put the financial system at risk. And so the things that I guess question I would leave to think about here is there an opportunity for Oregon to kind of take a leading position in creating, whether it's a regulatory sandbox or some different kind of ways to help foster innovation and allow banks and credit unions to partner with fintechs in a way that helps drive towards some of these areas where the market's headed, yet do it in a way that's going to have the desired outcomes that we all want.
Thank you. So you said two words that I think are pretty critical, trust and transparency. And we're seeing this shift in the economy of innovation to one of true trust and transparency. The next gen is demanding those kinds of ethical behavior from companies and governments. So Josh, you were really inspiring on the last one with how everything is going to be impossible. So maybe you can leave us a little more uplifted with some thoughts on how do you create trust and transparency in a highly regulated industry when you're using such innovative technology?
Right. So I'm going to go the other way now, and I think that with the technology, there is a lot of opportunity for that trust transparency. So one of the things that blockchain does really well is opens up the access to data. So what Sid was showing earlier, there's a permissioned access, which means if you know where to look, you got the key to look, you can look at data. And what it does is it basically opens up a lot of what are now behind private company walled gardens, especially in financial and insurance. You can open that data up. So basically, if you imagine a big giant spreadsheet on the wall, but it's all coded, right? But I can tell, Aaron in the back of the room, I can say, look at square C15, and here's the key to unlock, your little decoder key. You can see what's in that box, right? So rather than having to, you look at like the credit card networks today, right? The average transaction touches like anywhere between 17 and 34 different servers to get an approval for a credit card transaction, right? Now, if that data, the approvals, all that information can be readily accessible, you've got the ability to then monitor, and you've got the ability to do a lot of things with it. Like JP Morgan developed a blockchain called Quorum, and so it's built for financial institutions. And one of the things that it does is you can actually set up a node as a regulator and monitor transactions on the system. Right, so by being able to do it, you don't see the private information, but you're able to see the transaction. You can spot, fraud and things like that, suspicious activity. The issue is going to be, anyone in here know how to run a node, right? As regulators, that's something where keeping up with the technology, it may be there, but being able to have the resources to access it, the people who know how to do it, that's going to be where a lot of the difficulty comes in. Trust is another issue, right? So you've got a lot of the trend is going towards ownership of your own digital identity, right? And blockchain's fostering a lot of that. So you can have my data, I control it, rather than a private company, and I can give access and take access away. Well, that's a really great development for the consumer, but how is that used? How do you make sure it's not abused? I think that it does open up a lot of doors for trust and transparency. It's just how long is it going to take regulators to get there to keep up when it's moving at just such a rapid pace. So I think there's a real great opportunity there, and I think a lot of the stuff that's going on in Oregon right now, like there is a sandbox, which Aaron's been a big part of getting set up for innovation. I think that there's a chance to get that leadership role. But again, it comes down to budgets and technology and a lot of the stuff that government isn't always the best at. So, you know, I think there's going to be opportunities there. It's just how well we can actually seize on them.
Awesome, thank you. All right, so you talked about some of the technology. So Alvin, I'm going to pick on you first. What are you seeing in terms of actual products and new tech on the market for financial and insurance companies? And I think you might have a few slides. So, here we go.
The two PhDs got to put up some slides. So 10 years ago, I mean, this technology is fairly new, even though some of it emerged like 10 years ago. But I wouldn't have never imagined I'd be at a place or a conference called the Decentralized Insurance Conference. I don't know if you guys have heard of that, but somewhat obscure. But I was one of the organizers of that conference. It was in Europe last year. I want to show this example because I think it highlights something interesting. So this is one of the attendees of the conference, and his name is Julian. He's at the airport, and he's waiting for his flight to start. He notices on the screen that the flight it's at 45 minutes of a delay. And instead of being upset, he's happy because he purchased a flight delay insurance contract, which is based on blockchain. And he basically notifies, or he puts this up on Twitter, and within an hour or so of him getting onto his flight and moving forward, while he's in his plane, he's already getting paid out because the contracts are already processing the fact that the terms of the policy were pre-agreed, and it's just software that's executing a lot of the underwriting and the issuing of the policy and then the payouts. And on the screen or the tweet, let's say, on the right side, he has a link there where anybody can click that link. So anyone could go to this tweet, click the link, and see that the transaction was made, that the value was transferred as far as the payout. This is a quick schematic of what's happening. On the right side is the application. So it could be on your phone, or it could be on a screen, on a computer. And in the middle is where a lot of the magic, let's say, is happening. It's where we're moving a lot of the insurance workflow basically in front of the client. A lot of it's happening using automation. And several of the key elements of actually insurance work that was done maybe in the back office, or maybe it was done in different parts of an insurance firm, maybe even a tertiary or a third party, is being done by a suite of smart contracts that are triggering different elements based on pre-agreed upon rules. And then there's a third sort of box on the left, which is data, right? In this case, we're using flight data to basically determine whether or not the flight was delayed. And all of that is basically happening effectively in real time. And that's basic. It has a user experience benefit, but it also cuts down on operational costs. And when we look at it from a regulatory perspective, if you have a window to that, you basically can see when policies are active, what kinds of exposure are out there, what kinds of solvency companies have, and I think that's actually pretty powerful. I'm not going to go through every single one of these, but these are some of the implications that are already becoming apparent. I think there'll be more in the future. It's a little bit small, it might be, to read it from back there, but essentially, this is a table. You could pull it up from Willis Tower Watson's website, showing several of the different ways in which insurance in particular is going to be affected, or could be thinking about and leveraging these technologies, from automation to issues related to what's often called disintermediation, where software sometimes, or in this case, smart contracts, is getting in the way and basically saying, well, instead of going to like 10 different entities or 10 different individuals or departments, it's just being dealt with one software program, essentially. And there are ways to leverage this, but what I wanted to articulate is that from the insurtech perspective, one can see a lot of possibility and potential. And what I see a lot of companies running up against is the fact that even if you have a new, basically you're coming into the market with a new stack and you don't have to deal with a lot of the legacy technology, what insurtechs are missing in large part, and what the incumbents and some of the more established companies have, and maybe, and it's I think becoming more and more clear, is that there's still actually a lot of trust in the incumbent companies. So if you've been around for a long time, people have interacted with your company or your brand, you have a visibility, and there's some built-up trust that is I think, pretty powerful. And some of the insurtechs look like they're fancy and they have all this automation and these IoT devices, et cetera, and they're leveraging that, but they don't necessarily have, they haven't built trust yet. They haven't done that. They haven't accomplished that. And I think that there's a lot of collaboration that's possible, and I think it was mentioned earlier in the first panel, where incumbent firms are actually working with some of these insurtechs or fintech companies, and I think that can actually be pretty powerful.
Awesome, thank you. All right, so Siva, we're going to turn to you at the end, and we're going to ask you to play futurist over here. So we've seen some examples of where blockchain is currently being used and how some future tech is being used. Where do you see this in the next 5 and 10 years?
It'd be difficult to say what happens in the next 5 and 10 years. Can I take a 30-year view?
Yeah,
So,
30, 100, whatever.
Let's do 100. I mean, clearly you hear a lot about blockchain being the technology that brings trust. But remember, blockchain came from Bitcoin, and Bitcoin, the latest information is 6 million Bitcoins have been lost or stolen forever. 6 million doesn't seem like a big number, but you have to remember that the total number of Bitcoins that will ever be there is 21 million. So if a bank came and told you, I'm going to potentially lose or have lost 30% of the entire financial ecosystem that you rely on, that is not a way to build trust. So the question then is, what good is blockchain? If the foundational application has lost a third of it, or 30% of it almost, the trend indicates it was 4 million to 6 million, it's going to be a third of the money. But if you take a 100-year view, if you think about the world that we live in, the digital world, there are basically 3 things. There is infrastructure, computers, networks, and so on. And then there is data, and then there is application, right? Does that make sense? What internet did to the infrastructure over the last 30-some years is made it extremely cheap, right? You don't even have to own a computer, you can do computation, right? You can rent services. So internet basically made that bottom stack over the last 30 years extremely cheap. But data is still expensive. Everybody wants to have their own data, provide an API, charge an arm and a leg. If you're a financial institution or an insurance company, you probably know what that means. If you sneeze, you get a $60,000 bill. So blockchain will fundamentally make that really cheap over the next 30, 50, whatever number of years. Whether you trust it or not, it will be really cheap, just like internet. I don't think anybody can say here you trust internet, do you? Anybody trust internet? Okay, but we all use it because it's really cheap. That's what blockchain will do to data. That means applications, we see plethora of applications today. Imagine when data is cheap, the amount of applications that you will see. So that's what I see the future of blockchain to be, because the data will be cheap.
All right,
Data storage.
I was going to say, keep the microphone in front of you because we're going to do another all question down the panel before we open it up in the room. We've learned a lot. We've talked a lot about trust and transparency. We've talked a little bit about tech. I think you've done a really good job of hitting on how this is going to affect regulated industries. So, final thoughts. You just played futurist. What do you want people walking out of this room to really take away from the last hour?
If there is one thing you should know, at least from my vantage point, I'm obviously putting my lens, I drank my Kool-Aid, my tongue is purple. Make sure that if anybody tells you there is trust, ask them how, and they'll almost always say it's encryption. Ask them where are the keys.
I think the thing I would say is that over the next couple decades, the consumer expectations and pressures are just going to continue to build and mount. And I think that the challenge is going to be for financial regulators and the traditional banks and credit unions have really got to be able to adopt technology much faster, test, experiment much faster. Otherwise, I think consumers are going to kind of vote with their feet, and there are more and more ways, whether it is blockchain, whether it's cryptocurrencies, whether it's a whole variety of other alternatives where they can kind of go around the regulated system. So I think that for the survival, particularly of smaller institutions, they need to be able to be much more responsive to customer demand. And I think that's going to be a challenge for a regulatory framework that can support that. And I think if that can happen, it's a real win for everybody, not the consumers and the economy as a whole.
Thanks. I think so. I mostly echo what I'd said previously, which is that I think there's a lot of potential for incumbents to leverage the technology because they're already in the market, they already have customers, and I think the next step, or the best next step, is to really immerse departments or elements of the team into understanding these technologies more closely, because not all of it is relevant, not all of it is going to stay around, right? Some of it may wash away in the next year or two, but some of it is definitely going to be a game changer. And the same thing, I think, for regulators. My experience with regulators and policymakers, both here in Oregon and other parts of the United States and the world, have been that the more they understand and the more they get involved, the better it is for whatever jurisdiction that they're in. They're more educated and more capable of interacting with their constituents and with entities. And so I would just encourage that.
So I think we are, as I mentioned, we're going to see a lot of change with this over the next 10 years. I think a lot of the innovation is going to come not from the traditional players. I think it's an opportunity for a lot of new entities to emerge. I mean, you ask people, how many people just come up at dinner parties and rave about their bank, right? Their big bank, right? No one, I mean, everyone deals with them, and they're right now there's been a shift. They're winning because of technology, right? But there's a big opportunity to do some leapfrogging within the system where some of these innovations are going to really change the way we operate, both in insurance and financial services. And I think that's really exciting. I think there could be roadblocks because, as I said before, it's going to get weird. And depending on how weird it gets is also going to invite a lot of regulation and what that looks like. And I think, from all our conversations that we've had with regulators, and we've had a lot of them, they've actually been really great in that recognizing the innovation, not trying to stifle it, and especially here in Oregon, trying to really grow that. And we've got to keep doing that. Otherwise, there are a lot of other states that are trying to do the same thing, and that are if there has to be that balance, of course, between innovation and sort of putting the brakes on, making sure people aren't doing stuff they shouldn't be doing. But I think, recognizing that just because it's a different way of doing things, that it's not necessarily bad, and making sure that the resources are put to understanding it and being able to handle it.
Just wanted to make a quick plug for those that are interested. Portland State is ahead of the curve in many regards for launching a new business blockchain certificate program that will start in the fall of this year. There's information online. We just got final approval. It's the fastest program ever to be accepted by the university, and now it's legitimate to actually talk about it publicly and market it now that it's been approved, like I think last week. So for those interested, I would encourage you to look into that. Thanks.
Now you got to figure out your syllabus, right?
Anybody else want to do any plugs before we open it up to the audience? Good. You all have some of the brightest minds in the state around this topic here in front of you, and I've seen a lot of active engagement and participation in note-taking, so we're going to just open it to questions now. There's mics being run in general direction.
Great, thanks. I have a comment and a question. First comment is, where are the women? Right, it's on everyone's mind, right?
This is called a mantle.
This is called a mantle, for those of you who didn't know. Thank you, Kara, for stepping up and being the facilitator.
If it makes you feel any better, I found all of them. So
I know,
I led this.
I know. It's the boy band, but I go to these events all the time, and I'm usually the only woman, and I'm an old woman, and it's really not a good thing. So it's not really a question. I'm just going to leave that hanging in the air. My question has to do with the sandbox. So we talk a lot about sandboxes. They all sound cool. Everybody wants a sandbox. But I want to ask each of you, if you would just give your brain a minute and say, okay, in Oregon, if we could create a sandbox for FinInsure Tech, what are 2 things it would have to do?
I think one, it needs to make third-party vendor diligence much, much easier and faster. So you stop hearing from banks and credit unions, oh, I can't bring on a new vendor. It's going to take me 10 years to do it. That's one. Second thing is, I think it needs to be risk-based. And so, you don't want an experiment that could take down a whole financial institution, but the bigger the institution, maybe the more risk they can take in terms of number of customers, in terms of balance sheet risk, things of that sort. So I think it should be make third-party vendor diligence really easy and risk-adjusted.
One, find women to do it, and 2 is it's really critical for people to know whether you want trust in the ecosystem or do you want cheap. You can't get both. So we'll have to decide where Oregon wants to play. There are a lot of sandboxes, as I said. There are a lot of sandboxes even in Oregon. So the question is, how do you differentiate yourself? That's a challenge. The easy thing to do is to copy somebody else, which we don't want to do, because you're not going to do that.
Well, the few things that I've seen in sandboxes that I think would be helpful to incorporate is, one is that it not just be a superficial sandbox where you're just getting you're getting less steps to talk to regulators or to understand the compliance requirements, etc., but actually substantially be a different regulatory environment that's made some exceptions for a particular time period for certain types of compliance. And the other part is just to have, I think the most encouraging thing that I've seen, maybe it's not a model in the UK, is that it's not necessarily a model. I don't know how beneficial all the things that have come out of it, but it's excited a lot of people, the fact that they keep coming out with batches of new it's almost like an accelerator. They'll put it out and hundreds of companies will apply. They'll select like maybe 12 or 15 at a time, and they'll work with those, and then 4 months later they'll do this again. And I think it allows people to build a rapport with regulators. It allows people to experiment at a faster pace given how fast technology is changing.
Yeah, I would just say, put the proper resources towards it. So if you're, sandboxes are great to talk about and say, hey, look, we're innovating, isn't this exciting? But staffing up technology-wise, making sure you've got regulators who understand the risk side of it, the financial institution side of it, the insurance side of it, with people who understand the technology, because they're not always the same people, right? And being able to work together in those kind of teams to, we talk a lot about blockchain, and there's this idea that blockchain is bulletproof, right? And it's not. It's most certainly not. There's been plenty of proof that it's not everything it's made out to be in a lot of cases. And so understanding the risks properly means understanding the technology. And I think that there needs to be a real dedicated effort to doing that if you really want to do an innovation sandbox.
I'll answer the question of where the women are. I've been in the tech industry for 20 years. It's hovered between 20 and 25% my entire career. as the association, the Tech Association of Oregon is looking at how we can be a leader in innovating diversity and having some of those conversations. So if you would like to know where the women are and how we can help that sort of programming, come and talk to me.
Thank you very much to all of you for a fascinating presentation. But I wanted to focus on one of the most important things. We represent life insurance companies. And one of the slides that you had, Alvin, was about creating better pricing and more accurate risk assessment. And I want to ask you, and perhaps also Trevor, to talk about how can we ensure our regulator that our risk assessment is not only accurate, that the data it may be cheap, but it has to be accurate and reliable, but also that the data is being used fairly, that it's not being used unfairly through some underlying technology that is discriminating against people or using data in a way that is negative to people. How can your industry show us or show the regulator that there's integrity in that process?
Yeah, so the two sides of cuts both ways, right? So you have you can create much more precision, but then you could potentially discriminate more. And from a regulatory perspective, it means that they need more visibility, right? There needs to be some way to set certain standards. Tags, meta tags, things like that, where they and dashboards that they can keep track of exactly what's at some level. How is this actually manifesting in terms of who's getting these policies, etc. And I think Josh referred to this. So in the blockchain world, without getting too much in the weeds, there are variations from moving to entirely private, systems and entirely public systems where you have something in between. And I think in these highly regulated industries like in financial services and insurance services, there's a lot of leeway, I think, right now. This is a great time for regulators to get right into it and get involved, because they're the ones that really have the ability to make some of these decisions around what the standards are.
I think you're hitting on a really hard point, because a lot of times, I kind of view it as there are two types of discrimination you can think about. There's something that's just discriminatory on its face, that if you're making a decision based on somebody's gender or ethnicity or something like that, then that's pretty easy to say you're making a decision based on something we don't want you to make a decision on. But then there are things that have the consequences of discriminating against a population, even though on its face it doesn't seem discriminatory. That's an area where I kind of link back to the sandbox, when part of what I mean when I say risk adjusted is sometimes you don't know that a data source will have a discriminatory result until you're able to kind of run an experiment and test. And that's an area where I think that regulators could say, look, we're going to take a small population of a financial institution's customer base, let you bring in this new data. On its face, it doesn't look like it's going to be discriminatory. Let's run some experiments and do some testing, and in hindsight see, and if it is disproportionately impacting a population, let's figure out how we can tweak and fix it. That, I think, is something that's helpful, and that regulators, I think, could do, kind of moving to that type of test and learn and iterate, and be able to cabin the population so you're not kind of impacting 50,000 customers at once. Maybe you're starting with 1,000, and be able to kind of tweak and refine, as opposed to let's require the data up front, and then that kind of slows down the experimentation. Because you may also find that it's some of our customers that do nonprofit lending, they look at some other kind of non-traditional factors, and it actually benefits populations that they're trying to target, minority-owned businesses, women-owned businesses, things of that sort.
Yeah, I think that there's it's a really important point. There's this myth within not only around the blockchain world, but just in tech in general, that there's this ability to do this blind automation. We're not gonna we don't look at color, we don't look at race, gender, anything, right? It's just automatically going, well, someone's coding that. Someone's coding instructions in. I think a lot of these automation decisions, when you start doing smart contracts, someone's got to put in the rules, right? They're based on rules. They execute based on rules. And if those rules are built around a particular worldview or coming from a particular perspective, they're going to end up excluding people, just like they have in insurance traditionally or in financial service traditionally, where you've got rules set up where someone says, oh, well, this is a standard question, but if you come from a certain background, you're not going to understand that question or have a different answer to it. And so, again, I totally agree that there's an opportunity there to really dig under the hood and understand how those decisions are made to make them less discriminatory. But that myth persists and has been in the tech industry for years and years and years, and it's really hard to shake because on the surface it does appear blind. It appears, oh look, it's just going, it doesn't know who's asking these questions. And when you get into more and more automation, it becomes a bigger and bigger issue. And I just realized that I sound like the angel of death through this whole thing. Because everything I said is negative. Well, I've got really positive things to say.
You're really optimistic guy.
Sorry.
Okay, so I guess I have the microphone, so I guess I get the next question. So mine, I'm kind of going to the consumer side. So I'm a health insurance agent, been working with the Affordable Care Act, and when that set up, when the federal marketplace set up all that software, I think it was set up so the insurance companies would need agents, people would go in and use the system. And I think this is, I don't know if this is what, kind of where you guys are saying it's going to head, but so my question is, as the consumer uses these systems as things move forward, do you see that the consumer will be able to do it on their own, or will they need to be advisors or agents or that type of thing to help them navigate what you see happening?
I can give you kind of an example from lending and what I'm seeing financial services, not necessarily related to insurance, but I think there's kind of parallel here. I really think that a big trend where things are going is combining people and technology. So for kind of, you think about financial services, the mundane stuff of moving money from this account to this account, depositing a check, things like that. People want to be able to do that quick, fast, easy. Don't really make sense to have a human in the loop. But when it comes to advice and navigating things, as the world goes on, insurance products are going to get more complex. There are going to be more of them. And having somebody who can really help understand what is it that you're trying to solve as a consumer, what is your need, and provide advice on how to best accomplish that. There's a real hunger for that. And even with younger folks, when we look at some of the demographic survey data that we do, we see that same need with millennials the same way we do with baby boomers. And so I do think there is going to be a role for whether it's wealth advisors or insurance agents or brokers to help provide that kind of higher level advice and guidance to folks that can be kind of hard to entirely automate.
Yeah, I think I would agree with that. I don't know anything about insurance industry, but at a high level, as we see, the technology is making things happen faster and faster and faster. So trust is important there, and trust depends on who are you that wants to do something. That we call authentication, but before you can authenticate something, somebody has to prove your identity well before you get into the digital system. That will stay in the people realm, where agents can be very helpful. I don't know about insurance, but generally speaking.
That's a really good question. I just want to recap what Trevor just said, and I heard in the earlier panel, Chris has these aphorisms, and he could come up with a book where you automate the ordinary and you personalize the extraordinary. And I guess in insurance, I think we will see that happen, and so there's going to be a shift in terms of where the human element or people, agents, and other other persons in the traditional value chain are involved, as certain features are automated. I don't think everything can be automated, and it's important to incorporate the fact that even if you automate systems, we're going to have some kind of hybrid. So even if you, for instance, automate claims, right? There is a certain percentage of claims that you can automate with some degree of certainty for an auto, for an auto event. But for life events or for health events, it's going to take some combination of using automated devices or IT devices plus people. Maybe they won't happen in every single case, but I would say just maybe it would be like what that aphorism was, in the extraordinary cases or in some subset of cases where we're not sure. Well, then we're going to need people, and we're going to need experts that understand how to do those claims, right? Because we can't trust the automated systems for everything.
Time for one more.
Two quick questions. One in general, the programming language, especially with your background. Do you think that Ethereum is going to kind of continue to be a large backbone of what's behind, or the language that would be used behind a lot of this? And then the second question is, I know we're kind of focusing on blockchain, and it's been mentioned that there's been some, it's not flawless. So like there's a quantum issue and there's some other issues, especially as that technology, quantum computing kind of gets out into the marketplace. So compared to that, like the IOTA Tangle, that kind of stuff, where do you kind of see that might leapfrog, or that both technologies could kind of emerge and kind of be applied differently to different functions?
I don't know, go ahead. That just took it to the next level.
I think it's difficult to say which coin would be the predominant coin. I think if we all have to be successful and blockchain recognizes its value, it should not be one for everything. I think that would be a terrible idea.
I mean, I could go on and on, but I mean, I don't know if it would be beneficial to everyone. But just a quick 2 cents on that. So I think Ethereum, which just happens to be the second largest system after the Bitcoin network, it's the Ethereum network, and it's important to know about because a lot of how major banks, for instance, are using blockchain technology today, in many ways, is just a derivative of what that system, the Ethereum system, developed in public. They're implementing it in a private way. And last I heard, some of it just is a function of who can build these systems and what do they know. And it sounds like with Ethereum, they have a head start because they were the earliest system to do these kinds of things, to run things like smart contracts that you could use in insurance. They're like twice as far as developers that actually use that system and understand that language than the next system. It doesn't mean that it's going to last. I mean, there's no way to predict at this stage, I don't think, but it definitely has a lot of adoption in terms of people building things. And as far as the other question, I think that is an important point that maybe everyone here would benefit from, which is that there are ways to implement or have the same effect of a blockchain without even using the mechanics of blockchain and without going into blockchain. It just means that, so some of the things that the person had mentioned, there are kinds of technology now and innovations that actually look really different from the earliest form of the Bitcoin blockchain, the Ethereum blockchain, that are not even blockchains anymore. So it's like you were saying, it's getting weird. But yeah, I think there's room for a lot of innovation, and yeah, I think those things also will play a role.
Do you want to add anything, Josh?
Well, I guess all I would say regarding the quantum computing, right? So if I understand the question right, the idea is that when you're dealing with blockchain and cryptography, it's algorithms, right, that connect it. And the reason it's supposed to be secure is because it's, damn near impossible to have enough computing power to crack it or crack it in any way where you're going to be able to do anything to the system. So the idea is that you're going to develop a quantum computer that can do, trillions of calculations a microsecond or whatever, and you'll be able to crack this easily, right? Well, the other piece of that is as quantum computing develops, assuming you're going to do it on the other side as well, which is you're going to secure it with the same kind of technology, and so they should be able to keep pace. But I still think the stuff I've seen on it, which is very, very little, says we're a little ways off from that. I mean, again, this is not a bulletproof technology, but it's pretty good balance, I think, for, trust and cost, right?
I think that's it. Can we get a round of applause for our
Thank you, Aaron, for putting this together.
So we're going to take a 10-minute break now. Thanks again to the panel. We'll be back in about 10 minutes to wrap things up. Thanks, everyone.
I know.
I need a bell for next time. If everyone could please take your seats, we've got one last panel before everyone can head off for lunch. And I want to, thank the last panel that we had up here and Josh for constantly mentioning how weird things are going to get. I think it's a good thing in Oregon we embrace weirdness and love it as much as we do. And also it was mentioned that regulators are going to have very tough jobs going forward, and we're quite looking forward to that and embrace that. And kind of ties in very nicely to our last discussion today, which is about the regulatory aspect of innovation and what we're doing and preparing to do. So like I mentioned at the beginning of the forum, we are here to help you navigate the state's rules and regulations so that you can effectively implement ideas in order for Oregonians to see, use, and enjoy innovations first. That's why we kickstarted the state's Innovation Hub, which enables businesses and individuals to collaborate with us to identify ways to implement innovative products, services, tools, and ideas in an efficient and effective way. To share more about how that works, we're going to hear from some of our staff members who are closely connected to the Innovation Hub. A panel of all women, I can point out as well. Yes. So I'll start off by introducing our facilitator and our innovation liaison and a real driving force behind today's forum, Erin Tibberbaum. Erin's been a part of DCBS since 2007, serving as a policy analyst, first within the Building Codes Division and later joining our Division of Financial Regulation. Her areas of expertise include crowdfunding, cryptocurrencies, blockchain, cannabis banking, securities, and our 89 different non-depository programs. So I'll turn it over to Erin to lead this panel. Thanks.
And I'm going to stand up for just a second because most of what I'm going to do as an innovation liaison is get to a microphone. So as the innovation liaison, I figure my job is really just liaisoning. And the idea then is for folks who know exactly where to go to get their questions answered, they don't really need a liaison, they go directly to the site. For new folks that we've got who may not know if what they're doing is regulated, or how it would be regulated, or who they would talk to even figure out what's going on, that's what the liaison is for. And so my job is really to kind of just be there and get folks to the right people and try and listen so that we can ask the right questions, or if we we don't know what's going on, then we need to kind of reach out and say, can you please explain this? And then, of course, their job is to explain it. And then my job is to keep at them until I understand, and that we can make sure that everybody who needs to know what's going on, that can work with the companies, that can work with the businesses, that can work with the consumers, that can just generally work to make Oregon a more innovative place and get things done, that they also know what's going on, that I can help answer questions, that I can be between. And so my job on this panel is to really pass it off to the people who are the real driving force behind how regulators innovate. And those the folks. So we've got Kirsten Anderson, Tasha Sizemore. They're going to introduce themselves because we figured that was kind of innovative. Or learning from the next panel, we can't wear jeans, but at the very least, we can kind of take a more informal approach to just kind of say, you know, so we've heard how companies regulate. And I was at a conference recently and I said, you know, the key to regulating is to just think big and to be bold. And the bigger you think, you know, you're not always going to succeed, but if you can't imagine what comes next, then you're really just never going to get there because you don't know, you can't even imagine what it looks like. And so what it looks like is these things.
Okay, it is working. I couldn't tell if it was just the weirdness of sitting on this side that you can't tell if the microphone's working or if it really wasn't working. My name is Kirsten Anderson. I'm the licensing manager for the Division of Financial Regulation. I have worked there just shy of 20 years. When I started, I was in mortgage lending, did a little bit of enforcement work, moved over to management of mortgage lending and manufactured structured dealers, and then when we merged, I went with the licensing side where my heart lies with databases and numbers and production and productivity. Outside of the day-to-day of licensing, I also serve as the vice president of the American Association of Residential Mortgage Regulators. It's essentially the regulator trade group for mortgage lending. And that's where I was really excited because when when Erin came and asked me to talk about this, I was just like, I've already done that. We did that at the ARMOR conference last summer where we talked about the future of technology and innovation in the mortgage industry, which is undergoing amazing changes. You know, when I started back in 1994, you went to a physical location where a loan originator took out a bunch of paper and they wrote down things on that bunch of paper, and then they handed it over to somebody else who typed it into a computer. And then you were mailed a bunch of pieces of paper in the mail that you may or may not have read that told you what your loan was going to look like. And then you went to closing and you signed a stack of paperwork about 2 inches high, and you asked a couple of questions of your escrow officer. Where are my keys? When do I get to move in? And how much am I going to pay every month? And that was about what people asked. And then the regulators would come in after the transaction and we would take the stack of paper and we would go through that stack of paper to make sure that the consumers got the disclosures and that they were signed and they were done on a timely basis. And that's the way it was. But that's not the way it is anymore. The mortgage industry has changed greatly, the consumers have changed greatly, and the business has had to change to keep up with those consumers. There's basically 3 reasons why companies innovate, and one is because they need to make a profit and they see a way to make it better, cheaper, faster. They innovate because they have a scarcity of resources and they need something to fill the gaps that they have, and they innovate because their customers want it. And that's basically the 3 reasons why we see that businesses are out there innovating. And the reality is they're meeting a customer demand. And, you know, I look at it, particularly in the mortgage industry, which of course is my heart and my baby. You know, the customers of back then, that was what they were used to. You went to a physical location. Nowadays, you know, we have everything on our phone right in front of us. And it might be 2 a.m. when I want to look up and see, you know, what are the rates doing right now? You know, in the old days, you had to call a bank and you had to wait till the bank opened to call them and ask them what the rates were. Nowadays, I can, you know, roll over at 2 a.m. and look up and see what's happening on the market. I can fill out my application at 2 a.m. I can fill in a bit of it, go take the kid to school, get home, drink my cup of coffee, fill out a little bit more, head off to work at, you know, oh, I got a break, I got a little bit more information, wait for my husband to get home to remind me what his social security number is, and I'm filling out that application. I'm not doing it in a 1 hour appointment with a loan originator. I'm doing it over the course of my day in the places where it fits, because that's what customers demand. And so our job as regulators is not to intercede and prevent customers from getting what they need, but it's to make sure that what they're getting is the access to the education that they need to make good financial decisions, that they have appropriate financial products available to them that are offered to them in a safe and fraud-free manner. That's what a regulator needs to do. And in many ways, that is encouraging innovation. When I look back over my career so far, I look at a lot of ways where we actually have taken steps to help innovate, as well as the things we can do going forward to make innovation even more accessible. I still laugh to this day about the fact that we still have a requirement that mortgage companies must post a paper license on the public wall in their offices. Okay, when was the last time you walked into a mortgage company and asked to see the piece of paper on the wall that was their license? I mean, let's be realistic, even back then, it was only good that when we printed it, we could have revoked their license 2 days later and it could still be hanging on the wall. Now consumers, they don't look for a piece of paper on the wall. They aren't even going in that office anymore. Instead, we have a system where pretty much any time of the day, they can go out to nmlsconsumeraccess.org, put in their loan originator's name, and find out not only is that person licensed, what states they're licensed in, how long they've been licensed, and whether or not a state has ever taken administrative action against them for violations. This is putting the information in the hands of the consumers the way they need it, and yet we still have a silly little legislative law that says there has to be a piece of paper on the wall. Regulators need to be looking at those laws and saying there was a purpose for it at the time, because when it was written back in 1994, that was how you got a mortgage. But that's not how you do it today. Instead, we provide the protections to the consumers where the consumers are, not the way where they used to be. In addition, we need to look at the regulations that we have in place that serve a current purpose for protecting them, but perhaps require companies to use outdated technology. For instance, we made a change a few years ago. When the laws about how clients' money was to be handled were written, we did that through checks and deposit slips. A customer would come into your office and they would give you a deposit for their appraisal, and they would write out a check. And we had laws that said the mortgage company then had to deposit that money into a client trust account, and when they were ready to pay it out, they had to pay it out via a pre-printed check. Well, in 1994, that was how you ensured consumer money was safeguarded, and that there was a paper trail we could follow. Nowadays, who writes checks anymore? Who goes to the bank and puts anything and deposits anything with a deposit slip? I mean, I go to Chase, I stick my money in there, and it doesn't even ask me for a deposit slip anymore. I go down to my credit union, they don't ask me for a deposit slip anymore. The reality is that's not how people deposit money. We do it electronically, we don't do it with paper. And yet, there's still an effective paper trail electronically. Back in 1994, I could not log in and see what transactions that I've engaged in. Yet today, I can tell my husband stopped and got gas on his way home before he even comes through the door. We still can track money, we just don't do it in the same way. So one of the ways in which DFR has helped to innovate was to look at our old-fashioned ways of tracking and ensuring that consumers' trust funds were secure, but look at the ways in which that could be handled today that not only made it more efficient for companies, but made it so that they didn't have to worry so much about, I gotta send somebody to the bank because I need a deposit slip because you still force that, when I could just have them go on an app and transfer the funds directly into my client trust account. So we did take an opportunity a few years ago to update our client trust account rules to allow any form of electronic transfer as long as you can document the transfer. We didn't put any specification around how that transfer had to look like because, again, who knows how those transfers are going to look in the future. But all we wanted to do was say, however you transfer the money, it has to be done in a way that it can be tracked so we know what's happened with customer funds. There are also, while we looked at what technology we were requiring the use of and what was outdated and ways to not specify how that was going to be delivered, one of the other things we had to look at were other ways in which we were requiring protections of consumers that did not translate well into the new technology. For instance, some states, when it comes down to disclosures in the mortgage industry or advertising and things like that, they have specifications down to the size font and the font type that you have to use to deliver those disclosures, because people were providing disclosures in a way that consumers actually couldn't read them, but then when the regulators looked, they were technically doing what they were supposed to do. So the regulators' response to that was to say, okay, you must use Calibri font in at least a size 12 so that a consumer could read it. Well, that's really great on a piece of paper, but as these things translated over to phones, those fonts didn't always work in mobile technology. The sizing didn't always make sense in mobile technology. So one of the ways we are encouraging regulators to be more forward-thinking and to encourage innovation is to stop specifying forms of things and start looking at what actually gets the consumer the information that they need. One of the interesting ways in which I think mortgage is going to change over the upcoming years is I think we're going to see a big difference in how consumers get their information going forward on disclosures. We've always said things like, you have to give them these pre-printed disclosure forms and you have to mail them and they have to be delivered within 3 days. We've now moved to, okay, we're going to allow electronic delivery if you follow the electronic delivery rules. It seems like that the idea behind it is great. Consumers will know what their mortgage is, what the mortgage they're getting is going to be, how much it's going to cost, what their monthly payment's going to be, what they're spending to get that mortgage. But that means that they have to sit down and read those disclosures and actually understand what they say. There are companies who are already working on innovative ways to provide disclosures to consumers in a format that will actually help them understand what it is that they're getting. They're developing interactive programs that allow consumers to play along with it and see, okay, if I get this mortgage, I'm going to get I'll end up with these payments and all of this. So, I mean, it's really interesting to see where they're going and to support the idea that what they're trying to do is help the consumer understand better what it is they're getting in a way that they understand, in a way that's real to their lives. And our job as regulators is to make sure that the requirements that we put in place to protect those consumers don't often stifle them from getting things in a way that actually serves them better. I'm running long. I'm sorry, I could talk about mortgages all day. It's just me. So I'm going to turn it over to my esteemed counsel here, Tasha.
Hi, everyone. My name is Tasha Sizemore, and I'm the Product Regulation Manager at the Division of Financial Regulation. My team is responsible for reviewing both insurance products, and there's a small group of us that review securities products as well. And this is before the product goes to the consumer for the most part. And the way that I've seen the world change, I can kind of sum up in a pretty easy statement my husband asked me earlier this week. Would a transformer have auto insurance or health insurance? As you can imagine, things around the house get interesting when we're watching TV because I'm always analyzing it from, what would insurance look like in the Marvel universe? Or things like that. But it points out what my team has been looking at over the course of the past decade and the changes that we've been experiencing. When I started at the division in insurance in 2009, we were all geared up for healthcare reform. And in the past year, I've seen more movement in property and casualty and life insurance than I've seen in my entire career in health insurance. My team is dealing with more substantial issues that touch on moral issues. Earlier this year, my counterparts in Washington and New York dealt with the issue of gun control through concealed carry insurance. And so we're bridging the gap now of not just asking the question of does it comply with substantially outdated laws, but how does it fit within the moral framework of our society? And to make matters more interesting is, as so many people have noted today, regulators are usually the last ones standing to get on board with issues and ideas. And so we're not just facing barriers with understanding how to update the regulations, but we're also facing barriers with understanding how insurance companies and securities issuers are offering these products. So Kristen talked just a little bit about the issues that we have with the statutory framework, But one of the things that my team has been begging people for years to do is to come in and talk with us. And really that's the key to having us understand what's happening in the market. I really encourage everyone to come in and communicate. Tell us what you're thinking about doing. Tell us where this product fits within the framework of the company and the industry. So often we receive filings with very little information associated with them and we're left guessing. And oftentimes that means that we have to disapprove something that might otherwise have a place in the market. And that makes it really tough on insurers and issuers across the state and across the United States, because we understand that there's a vision out there, but we are very definitely limited by the statutes that we have and by the information that you provide us. So one of the things that I've encouraged my team to do is to go out and search out information. Do what they need to do to understand the products. The securities team is trying to find ways to implement an electronic filing system, which has never happened in the state of Oregon. And we're doing overall on product regulation, we're getting ready to launch a survey at some point in the near future, hopefully in winter 2020, that will ask questions about what's actually happening in the market. How are these products being used? How are agents distributing the information? And not necessarily how we can do better as regulators, but what tools do we need to better serve the insurers, the issuers, the consumers, the agents, the providers, the market in general. That is one of my key goals as we start to deal with more innovation in the market.
Thank you very much. And one thing I'm going to harken back to one of the things Josh had said is that, innovation disrupts regulation just like it disrupts every industry. If it weren't for the innovations happening, I wouldn't be an innovation liaison. So it's pushing us to move farther than we already, than kind of what we were always doing anyway. The types of things that we would look at and say, what is the value that we're providing here? How do we provide better value? And so disruption in the industries is helping, disrupt us to be more innovative, to think bigger. And yeah, it's already started to get weird, but it's in a good way. So, we might have like maybe quick time for a question or two.
No one wants to ask about the type of insurance coverage superheroes carry.
This is the problem regulators have. Nobody wants to talk to me.
All right, well, let's give a big round of applause for our panel. All right, well, thank you everyone for sticking around to the end. Let me wrap up quickly by first saying thank you to all of our speakers. There was a great wealth of information shared today. I most certainly learned a lot. I hope you all did as well. And I really appreciate our speakers taking time out of their schedules to come and share their insights and knowledge. So please join me in one last round of applause. I'd also thank all those within the department that helped put this forum together today. Especially want to thank our innovation liaison, Erin, and our communications officer, Brad, as well as our amazing organization team of Karen and Tina. And if everyone from the DFR and comms team could stand up and please be recognized. And also want to thank all of you who are here in attendance today. I know that you all also have very busy lives and it takes time away from your day-to-day work to come here, but I hope that, as I did, you not only learned something new today, but were able to make a few new connections as well with those in the room. And finally, just want to end by leaving you with 2 points, really stressing some things that I mentioned earlier. The first is I really and truly believe that Oregon is the place for innovators to bring new ideas, and I hope that you'll take advantage of our new innovation hub. And finally, we're here to help. I hope you took that message to heart from all of the staff, that we really are here to help, and we share the same goals as you. It's to bring Oregonians new products, new services, and new ideas that will all enhance all of their lives. So thank you again. Have a great rest of the day, and I hope to see you all again next year.
Thanks.